This third public hearing on the Passive Income and Financial Intermediary Taxation Act, or PIFITA for short, is now called to order. Let me direct the committee secretary to acknowledge the resource persons for today.
Morning, Your Honor. For today's public hearing, we have the following resource persons. From the Department of Finance, we have OIC Undersecretary Carlo Fermin S. Adriano. From the National Tax Research Center, we have Ms. Monica G. Rempilio and Ms. Maria Cicelia B. Rodriguez. From Bangko Sentral ng Pilipinas, we have Ms. Rosalia C. Ostorga and Ms. Christine Marie M. Liao. From the Securities and Exchange Commission, we have Attorney Ferdinand Logi S. Santiago and Mr. Vicente John Peñamora. From the Bureau of Internal Revenue, we have Ms. Marisol Girang and Ms. Nelsie Arcolas. From the Bureau of Treasury, we have Director Dominic Mariano. From the Philippine Charity Sweepstakes Office, we have Attorney Maria Catrina Nicole Contacto. From the Philippine Insurers and Reinsurers Association, or PIRA, we have Ms. Denden R. Tesoro, Mr. Michael F. Relosa, and Attorney Eric Recalde. From the Fund Managers Association of the Philippines, we have Attorney Julio Bucoy. From the Philippine Aerospace Development Corporation, we have Ms. Phyllis O. Castañeda. From the Department of Agrarian Reform, we have Attorney Justine Ann G. Licudo. From the Philippine Deposit Insurance Corporation, we have Attorney Luisito Z. Mendoza. From the Philippine Retirement Authority, we have Mark Genesis Roja. From the National Irrigation Administration, we have Attorney Bjorn M. Madrid. From the Philippine National Railways, we have Mr. Michael Ted R. Macapagal and Attorney Shian T. Juan Monera. From the National Housing Authority, we have Mr. Cromwell C. Teves and Ms. Cynthia Florence T. Cariaga. From the Microinsurance MBA Association of the Philippines Incorporated, we have Ms. Jocelyn De Quito. From the Philippine Life Insurance Association Incorporated, we have Mr. George Mina. And from the Money Market Association of the Philippines, we have Mr. Adrian S. Ching. That will be all, Your Honor.
Thank you, Comsec. Thank you again for joining us today. This is the third hearing on the PIFITA proposal, and we have a few more items that we need to cover. Hopefully, we can finish everything by today so we can go into the technical working group. There are very important items that we need to tackle and put on record. And let me start off with the what I call the biggest elephant in the room, which is the removal of the exemption of excise tax of pickup trucks. This is a 33 billion question that we need to address. Right now, except pickup trucks are exempted from excise tax. And because of the standardization and harmonization of tax rates for passive income and in financial intermediaries, the revenue intake will be negative, meaning we will actually lose revenue from that harmonization. So to cover that negative revenue intake, it is being proposed to remove the excise tax from pickup trucks, because the argument there is pickup trucks are not being used for businesses or for agriculture. And the projected revenue that we can retrieve from that removal of exemptions is about 33 billion. So it's a 33 billion question that we need to tackle. And I want to start off with that, just to refresh everyone's memory. During the discussion on train, the discussion to remove, or the discussion to exempt pickup trucks, is because pickup trucks are being used for agriculture. And a lot of the pickup trucks that are being bought are used for small and medium enterprises, particularly for agriculture. And in support to the agriculture sector, the legislature removed the excise tax, or exempted excise tax on pickup trucks. But after I think of a few years, 4 or 5 years of implementing this exemption, there are reports that the intention of channeling pickup trucks to agriculture is not being realized. No? So there's a proposal to remove that exemption to cover the negative revenue impact of PIFITA. But as you all know, in politics, once you give, it's very difficult to get back. No? So we need to justify it thoroughly why we are removing the exemption. So I want to start off with that because that's a very important question that we need to address, whether to continue the exemption or to remove the exemption. But we need to justify to the public why are we doing so. Not because just to cover up the negative impact, but the intention is not being realized. So we want to start off with that. So we call on DOF to help us justify why we are removing the exemption from pickup trucks, and what are your findings based on your research over the past few years on this particular exemption. So we call on ASEC Adriano to brief us on this.
Thank you, Mr. Chair. Good morning, everyone. We actually prepared two presentations for today. So one is for the pickup trucks, and the other is the refined DOF proposal for package 4. So I guess I'll start with the pickup trucks
The refined, I heard you refined proposal,
proposal of the DOF.
but that will also include the removal exemption.
Yes.
Okay.
Next slide, please. So just a brief background. So train law introduced the exemption of pickup trucks from the excise tax on automobiles under Section 149 of the tax codes. And pickup trucks were granted special tax treatment under the train law for the use as utility workhorses for small business owners and professionals in their livelihood. However, the Department of Trade and Industry observed that manufacturers modify pickups to serve as passenger, leisure, or sports utility vehicles. I would like to note that we're working together with the Department of Trade and Industry for this proposal. Next slide. Next slide. Next slide. So just a brief background. So here is the excise tax on automobiles. Just a brief background of the table. And the next slide. This slide just shows you the automobiles covered by the excise tax. And as you can see, those with X are not covered, like pickup, monster truck, mini truck, big trucks, and bus. Next slide. And these are the list of automobiles not subject to excise tax or with special rates. Next slide. So I just want to point out here in this table the single cab chassis. So this is like a pickup truck but only have a single cab. And for reference, the single cab chassis has always been exempted from the excise tax ever since, even before train. And then we have a special rate for hybrid. Excise tax is at 50%. And then we have exemptions also for electric vehicle and automobile used exclusively within the free port zone. Next slide. So these are just some of the pictures that are exempted or not covered by the excise tax. And as you can see, there's a picture of the single cab chassis over to your right. Next slide. So other pictures, and this is basically the pickups, what we have right now. We call them double cab. Next slide. Next slide. So what is the rationale of the reform? So post-train effect, pickup trucks, most double cabs are used for leisure, mountain trail, daily use, passenger hauler. This is clear deviation from the intention of the framers that pickup trucks are used in agri and business. This came from the Department of Trade and Industry. Next slide. Now, it's important to note that pickups come in two types. As I mentioned, yung single cab and the double cab. And they should not be treated similarly. In terms of sale, single cab around 3,000 units. And I will show later for the double cab, it's around 57,000 units sold in 2023. Now, the single cab pickup, according to DTI, is the real workhorse vehicles for cargo and people transports. As such, they have always been exempted from the excise tax. Now, on the other hand, double cab pickup is recorded and marketed as a lifestyle passenger vehicle, and like other passenger vehicles, should be levied excise tax. Next slide. Now, in terms of price, the average SRP of a single cab is only around 990,000 pesos. It is almost 50% cheaper than the average price of a double cab pickup at 1.7 million pesos. Now, single cab has the same utility value as a cab and chassis with top hat. This utility vehicle also have a much bigger cargo capacity at 1,000 kilogram versus around 450 kilogram for double cab. So mas mabigat po yung pwedeng karga ng single cab compared to double cab. Now, this feature, together with their cheaper price, makes them the ideal vehicle solutions for various commercial applications. Next slide. Next slide. Now, in terms of actual sales 2018 to 2023, now following the trend, the industry, after a continuous 21% year-on-year growth from 2012 to 2017, experienced a sharp decline, 16% decline in sales across all vehicles products, except in the pickup segment, which saw a huge and immediate growth of 28% in 2018. Now, it is important to note that most of this double cab chassis are imported from Thailand. And the lone Japanese brand manufacturer cited that train, which effectively removed the protection afforded by the excise tax as the final turning point for its decision to stop local production of pickup here in the Philippines. Next slide. Now, this slide shows you the actual sales from 2018 to 2023 for pickups. And as you can see, the share of the double cab sale to the total pickup sale is around 95%. So almost all of our pickup sales is actually double cab. And as of 2023, we sold around 60,260 units of pickup trucks. And out of that 60,000, around 57,000 is double cab. Next slide. Now, according to DTI, there's no doubt that single cab is used for commerce and industry, including agriculture. Even if only 5% of the total sales pre- and post-train, rightly so, it has also been exempted from excise tax. Now, with regard to the double cab, there is, according to DTI, they don't have an empirical data to support any claim regarding its use in agriculture, and only the auto industry can present the numbers as reflected in invoices, especially for bulk sales. Now, they have anecdotal evidence, although, that these double cabs, agri products are largely transported by hauler trucks and by cab chassis, van, jeepneys in local regional provisional markets, and they're not using double cab pickup. Next slide. So they just gave us some examples of yung mga use of single cab. And ito po yung ginagamit for agriculture. And as you can see, wala dyan na double cab. Next. Now, what will be the effects? So, inarguably, there are also industrial users of double cab pickups as service vehicles, particularly the utility companies in power, telco, and water. However, these are companies engaged in regulated franchise industries where the return on investment are guaranteed. They paid excise tax for all their pre-trained purchases of pickups. As I mentioned, these pickups, double cab chassis, were not exempted before train, has always been exempted from excise tax. There's no point in them benefiting in terms of lower acquisition costs unless it can be shown that such savings are passed on to the consumers. Next slide. On the statistics usage, pickup market share has increased from 9% prior to train to 17% from 2018 to 2023, clearly indicating a shift in market preference. Now, what is the effect of that? So while pickup market share has been increasing, the market share of the sedan has actually declined. So from a high of 40% in 2015 down to 25% by end of 2023. Now, why is this bad? Because it has detrimental effects to the sales of cars like such as Vios and Mirage, both are locally manufactured models under the CARS program. So there's a disruption in terms of demand because of the exemption of excise tax on pickups. Now, next slide, what will be the effect on buyers? Definitely, the imposition of excise tax will push greater sales in the short term before the exemption is lifted. But after the excise tax is imposed, DTI mentioned that definitely there will be a decrease. And this decrease actually is part of our estimate when we estimated the revenue impact. We determined an elasticity and included it in our assumptions. Next slide. So this is just a table summarizing yung House bill and the DOF proposed Senate bill. So both wants to remove the exemption of pickup trucks. Next slide. The next slide will show the impact on prices of the double cab, yung mabenta po ngayon. So for instance, for Ford Ranger, so from around 2.3 million, it will increase to around 2.8 million. So around 500,000 increase. For the Toyota Hilux GRS, from around 2.2 million, it will go up to around almost 2.5. Isuzu D-Max from 1.9 to 2.3 million. For the Mitsubishi Triton, it's from 1.9 to 2.3 million. And then for the Nissan Navara, from 1.8 million to around 2.2 million pesos. That ends my presentation.
Kailangan na yata bumili ng pickup truck. Baka ma-approve to eh. No? But kidding aside, Asek, earlier you mentioned in your presentation that in terms of actual use, you don't have data in terms of actual use. You mentioned earlier that 95% of the total pickup truck sold, no? Let's flash that na rin. 95% are what we call double cab, no? And this is the topic of contention today. The single cab, wala tayong argument yan, no? Because I think everyone agrees in this room that based on the picture, no, single cab is the one typically used for deliveries. That's exempted before, exempted now, and the reason for that is because businesses use that, no? So as support to our businesses, especially MSMEs, government exempted it. Now the double cab, no, is what we want to discuss today. This is the point of contention, and what we are arguing is, well, in the past, the argument there is these double cab pickup trucks are also used by businesses, particularly the agriculture sector. But I wanted to see data or at least information that I think you mentioned the 57,000 units sold, tama? No? The 57,000 units sold, how many of that went to agri? How many of that went to businesses? How many of that went to quote-unquote lifestyle or personal use? No? Not because they're being advertised as lifestyle, it's not used for businesses. No? So that's what we want to uh, um, talk about, no? Because we need to demonstrate that it's actually being used for lifestyle. I know personally, I know people who bought pickup trucks and used it for their families, no? Or minsan double, they use it for moving big items. Some of them are talagang naman marami being used for lifestyle, no? For example, if someone ang hilig niya is mountain climbing, for sure may pickup truck yan, no? Because they put yung parang camper shell at the back, and they put all their equipment there, no? So but the question there is how many of that 57 are used for personal and used for businesses, no?
Uh, Mr. Chair, unfortunately, according to DTI, when we talked with them last week, they don't have data on the usage. They only have the sales, volume of sales for pickups.
Do we
This,
have any survey, for example, maybe a survey conducted by commercial public opinion poll companies, and tinanong nila, no, are you using it for business, are you using it for personal? Meron ba something like that, just as a gauge so that we can use it? Ma'am, you wanna are you from DTI? Feel free,
Yes.
you can join in, no? I can see that you're being consulted, so just identify yourself and then
Marisa Concepcion from the BOI's CARS
yeah,
program.
just give us your
There
thoughts
are
on this.
no known surveys done to distinguish yung end uses. I think what as you said, Carl mentioned, we don't have any empirical data. Only the industry can show in terms of actual invoices for bulk sales, assuming it is for agri or for other businesses.
Do we have that information?
No.
I know,
We are
I can
not
see, like for
privy.
example, Meralco, they use,
Yeah.
diba, double cab, no? Yung mga electric co-ops sa probinsya, they use that, no? So meron naman talagang being used for businesses, no? Especially utilities. I know the news agencies also use the same, diba? For example, ABS or GMA, they use double cab, no? So there are double cab pickups being used by businesses, no? But I don't know how many of those are being used, because I also know I have friends who use it for personal use, no? Not businesses. So how many do we have that information, and can we generate that information? Can we tap the BOI to generate that information? Because this is something that we have to study very carefully, no? And we don't want to be unfair also to those who are using it for businesses. Baka naman merong gumagamit talaga for businesses.
Yes, it's true. I mean, we don't deny that double cab pickups are used for businesses. But as we've said, they've always been paying excise tax prior to train. When the train law was passed, or actually during the deliberation of train, there was no request to remove excise tax on double pickups. I think DOF and DTI, we were both surprised to see that train actually exempted double cabs.
Mr. Chair,
Yeah, go
I
ahead.
think in the previous meeting or hearing, according to CAMPI, they have these statistics that 20% is used for agriculture, 50% for personal, and then 30% for others, if I'm not mistaken. And I would like to note that, yes, Meralco, GMA, ABS-CBN, and the others, this are using pickup trucks for their businesses. But we would like to know that these are big businesses already. So, and they were already paying excise tax on pickups before, and now we just exempted them. So, in terms of policy, I think what we need to do is to target If we really want to provide assistance for the MSMEs, particularly for the agriculture sector, the policies should also be targeted in a way that the beneficiaries of the policy are really the small ones.
I do agree, no? I saw in your picture in sa palengke. Can you flash that? I do agree that most MSMEs use single cab pickups, single cab chassis pickups, no? Because it's more efficient, no? You have more room to there, no? You have more room to put your items. So I do agree that it's more efficient, it's more useful. But moving forward, and just submit to us later on, but we need really figures. No? Itong dinictate nyo, SEC, the 2050-30, what information is this?
From the hearing last time, from Campi.
For Kamki. And can we get official, can you link up with Kampi to get official surveys or official data so that we can use that as a basis, no?
Yes,
Yeah.
Mr. Chair.
Yeah. And then are these the double cab, are these manufactured here in the Philippines?
Not anymore. According to the Japanese brand manufacturer that produces pickup trucks before here, they actually moved out of the country because of the train.
In other words, if we do remove the exemption and volume goes down, will there be unemployment or displacement of workers?
No more, because there's no more pickup truck manufacturer here for the double cab. Basically, what happened during the train is because it's now relatively cheaper to import pickup trucks from other countries. For instance, Thailand. The local manufacturer here of pickup trucks cannot compete anymore in terms of cost. For local manufacturing of cars, we have one for Vios and then one for basically for the sedan. We still have manufacturing for sedan. So by removing the exemption of pickup trucks, we're hoping that there will be more demand on our locally produced, quote unquote, locally produced cars, particularly sedans.
And then how many variations or models are we producing in the Philippines? Sedan variations.
There are only two right
Okay.
now, the Mirage and the Vios, but we also manufacture Innova and the L300 pickups. Okay.
But based on your experience, do you see any shift to these models?
The shift,
Do you think that
market shift is moving actually away from sedan, but towards vehicles with higher clearance, like pickups or the MPVs and the SUVs. Basically, because these are more flood resilient models, the higher vehicles. Kaya market is moving towards that.
okay? And do you see any? So what will happen with this phenomena? If we remove the exemption, prices will go up. Some people will no longer buy pickup trucks for personal use, at least. Will they move into those models that you mentioned? Because the best case scenario is they buy those models so that our domestic manufacturing will go up. Based on your
in the
expert
short
opinion.
in the short term, meaning for now, because of all these discussions about reimposing the excise tax, there might be an increase in the sales of pickup as buyers would tend to hedge. Okay, but as soon as the tax is reimposed, we can expect a short-term decrease in the sale of double cab pickups. But eventually, market will always adjust. Especially the buyers of pickups, these are for the higher end consumers or buyers. So eventually they'll be able to, when we say short term, maybe 1.5 years. So we're not worried that that pickup sales will suffer in the long term. We're not. In the meantime, for as long as they are exempted, we continue to lose important revenues.
Maybe request again from DTI and DOF to get data from Campi and officially give us your analysis on that. I remember Campi mentioned that ratio earlier, but let's already put together an analysis. No? Again, we just want to demonstrate from the public, especially those who are avid fans of pickup trucks, that the removal of the exemption is because the intention of channeling it to businesses is not being realized. No? For example, 50% are personal use, no? Which is not the intention, no? According to Campi. So, but then again, we just put some analysis on that and submit to us later on. And then in terms of manufacturing and employment displacement, there's no displacement because none of these pickup trucks, double cab pickup trucks, are being manufactured here in the Philippines. So we don't lose any employment to that effect. No? All right. Any more on the pickup trucks, Asek? And 33 billion is the target collection.
Yes, Mr. Chair.
Thank you, Asek. I have some questions for DOF, but I'll jump into that later on. I'll take advantage of the presence of BIR, who was not here last time. So, and BIR is one of the beneficiaries of this law because we want to make your life easier, no? By harmonizing everything. And then BIR, no? Oh, yeah, there. So we want to make your life easier. So we passed the ease of paying taxes to include, that's for the general public and to digitalize tax collection. But this time, the harmonization of rates and standardization will also make computation and administration easier. So I want to hear from BIR their comments on the bill and how this will help BIR in terms of tax administration.
Good morning, Chair. Well, if the excise tax from the pickup will be removed, the exemption on the pickup trucks will be removed, this will be a great increase on our collection, sir.
I think we all know that, ma'am. No, that's the intention. No, but from an administration standpoint, no, how will this bill help the BAR from administration standpoint? The collection, the 33 billion, that goes without saying. No, that's the intention, really. No, but we want to hear from BIR. Will this help your life easier, or make it more difficult, or you don't care? Ano bang? Because at the end of the day, it's you will be collecting all of these things. Eh. Hindi naman ho kami, no? It's BIR who will be the collecting authority. No? So we want to hear from BIR how PIFITA can help your collection and improve administration.
Ano yan? Yeah. Well, sir, it is easier on the part of the BIR because there are also reports on the excise that if there was a removal on the tax exemption, then definitely there was an increase on the tax. So it is easier on our part, sir.
I think, Pam, binasa niyo ba yung bill? No, the pickup trucks is only one element. In fact, it's only a small element, no? The entire bill deals with passive income and financial intermediaries.
Yes,
So it's
yes,
not
sir.
only the excise tax on the pickup trucks, but the entire bill, no?
Yes, sir. We have also on the passive income, there was also decrease of the final tax, but it's staggered. I mean, from 20 to 15%. We have also
You recognize the presence of Senator Francis Tolentino. Morning, sir. Go ahead, BIR. How will this make your life easier? What are the problems that you encounter in terms of uh, implementing the current tax regime to financial intermediaries and to passive incomes? What are the common problems that you encounter? I'm sure maraming audit yan because of the computations. So how will this make your life simpler and easier? And also improve administration. At the end, again, no, the goal here is to improve administration.
like for the um tax simplification of the withholding on tax on passive income, it is easier on the part of the BIR. Like the gross receipts from various rates to a single rate. So it's easier on the part of the BIR also. Though there was a decrease, but there are also increase on like on the exemption, the zero rate. It goes with 5% rate, that is the say in one rate only instead of 5, 1 or 2%, 5%. Passive income.
Parang I'm not so confident that BIR is in support of this bill. You should have more. For example, I'll give you an example. What are the common problems you encounter when financial intermediaries pay their taxes? Ano yung common problems that you encounter and how this bill can solve those common problems?
So like for the gross receipts tax, which is we have different rates. The bill proposed that 5% one rate only. For interest income, we have a final withholding tax of 20%, and there is also an exemption for more than 5 years. So the bill proposes a single rate, which is 15%.
Yeah,
And
we know that. That's included in the bill. From
Yeah.
from an administration
Which is-
standpoint,
Mhm.
how
Which
will
is-
it help you?
Well, it is easier on the part of the BIR since we're not going to verify many documents. You just multiply it with single rate. Like also in the gross receipts, you have to just multiply 5% on the gross receipts and not to check on the various rates like 5, 3, and 1%. And sometimes there's also an exemption on the more than 5 years of for the tax investment.
So easier computation.
Yes po, sir.
How many um, cases have you encountered or how many audit memos have you issued in relation to let's say uh, um, because the declaration is not so clear or the computation is not so clear, how many memos do you issue to audit financial intermediaries because computations are not so clear?
We have only one letter of authority per year per taxpayer.
How many of those have been due to computations that are not very clear or that are not in line with the declaration of our financial intermediaries?
Well, in our office, sir, most of the the office issued most of our taxpayers per year. Like if there are more on our banks, is we have if we have 84 or 40 no sorry 44 banks or financial intermediaries, they issued every year, sir. That's an example, sir.
Can you elaborate that again?
Sir, we have 44 banks in our office. So every year they issued one letter of authority for each bank, for each taxpayer, for example.
And it's because the rates are not clear to the BIR. Is that's why you issued letter of authority?
Well, for verification of their tax compliance, sir, that is for every year.
Okay. Can you, let's do this na lang, no? I want a comprehensive, I'm sure it will make your life easier, no?
Yes.
Because it's
Yes,
simplification,
definitely.
no? That's
Yes,
the
sir.
objective, no? Not
Yes.
only the life of our taxpayers, but also the life of the collector, no? But we need to be very specific, not on general
For the
terms,
number.
no?
Yes.
For example, we're harmonizing the rates for passive income. What are the common problems you encounter? For example, if maturities are more than 3 years, maturities are more than 4 years, how many audits do you conduct because the declaration is not consistent with your findings? No? Things like this, no? Because the aim also is to reduce the number of audits, no? To reduce the number of friction between the BIR and our taxpayers. That's the objective. To make it simple, in theory is to make it simple. We don't audit so much anymore.
Definitely. Definitely, sir.
So how many audits do you? That's what I want to. To get from BIR. How, in terms of the number of audits, in terms of the number of friction, how much will it go down? That's what we are after.
Right now, sir, we have no data on that. We will provide on our next.
Please submit to us a comprehensive position report. This is the third hearing. The last two hearings, BIR was not present. No? So it's important that BIR is ready and can give us a comprehensive opinion on this matter. Again, no, we will not be implementing this. BOF will not be implementing this. It's a BIR who will be implementing this. No? So we need to know exactly how this will help tax administration and also improve your collection because it's clearer now, no? And the rates are harmonized. And at the same time, give us also a breakdown on how many audits do you conduct all the way, lahat yan. No? I know that you have a lot of steps. And how this bill can reduce that number of audits and reduce the number of friction. No? I won't go into one by one na, ang dami yan eh. But the aim here is to reduce the number of audits so that compliance from our taxpayers will be much simpler. Just submit it to us. No? I can see that you guys are not ready to discuss that today. No? Yes, Senator Francis.
Transfer to the Constitutional Amendment Subcommittee. May we know from BIR? Because we've done this once, and I think we can do it again. Is the BIR ready, just in case this law is enacted, this bill is enacted, to implement a law, sans internal rules and regulations? Because a lot of times, and I've been questioning this since day one, a lot of our laws have been modified, reconfigured, mutated by IRR. There is only one lawmaking body. It is the Congress of the Philippines. So is the BIR ready to implement a law without implementing rules and regulations coming from your part? Because I've seen your hesitancy in answering questions. It's probably reflective of not just your speed in implementing laws, but how we forge sa kabilang room, what we'll be discussing would be the economic amendments. So is the BIR ready to do that? We both studied the National Internal Revenue Code. I probably have an additional input. I have studied the Federal Revenue Code likewise. So is the BIR ready to do that?
Good morning, sir.
Morning. Maayong buntag.
Sir. Okay.
Kaya ba yun?
We are also very positive on the implementation of the PIFITA, if ever this is implemented, because generally it helps us administratively for administrative feasibility. This will help us a lot. From 86 tax types, and it will be reduced to something like 36, 38. So it would help us in the implementation because there will be,
What would help you in the implementation? The new law?
yes, sir.
Or the regulations that you are probably thinking of crafting right now?
Okay, sir. For the IRR, sir,
Remember that
when
an
the law
IRR
is-
is a
Yeah.
delegation of
Yes.
authority coming from the Congress.
Yes, sir.
In another law which we just passed, and I think Senator Gatchalian can correct me, the last provision of the law contained a phrase like this: This act will be implemented 15 days after its publication in the official gazette or in a newspaper of general circulation without the need for implementing regulations. Can we do that here? So in that measure which we passed a month ago, it would be clear that the intent of the Congress is to have an airtight law and have it implemented without delegating to an administrative agency similar to the BIR, in that case the Department of Agriculture, the power to modify, to enact regulations which sometimes would be contrary to law. I can cite the Milk Code, for instance. The Milk Code was enacted by the previous Congress, but the implementing rules different from the law itself. So my question, can this be implemented without implementing rules? They are.
Sir, we are given 60 days for the drafting of the IRR, and
No. If our law now will have that
Generally,
provision
could be
that this will be implemented without IRR, you do not have that power to enact an IRR.
sir, if it is so stated by the legislative, then it can be implemented, sir.
That's my question. Thank you for the answer. And probably you should be wary of that. Although we know for revenue purposes, there are instances when the Congress would delegate some authority to enable the administrative body to fill up the gaps. But sometimes it has been subjected to abuse. Na iba yung batas. Iba na yung pinatutupad. Ang dami na ho. Nakadalawang privilege speech na ako dyan. Ang dami na hong... Pupunta ako doon sa kabila, Mr. Chairman, sa constitutional amendments and for the information of the resource persons and guests present here. Pinag-aawayan natin yung saligang batas ng Pilipinas, 17,000 plus words, if you have read the Constitution. One of the best performing governments right now in this planet is the government of the United Kingdom. Number of words in their Constitution? 0. There is no written Constitution in England. Yesterday I was in I was in the Kingdom of the Netherlands. Kasama ko yung mga governor, mga mayors. Sabi ko, pahingi ng kopya ng inyong constitution. Alam niyo sabi sa akin, we do not have any written constitution. And here we are, playing with words, fighting each other. Tala, dating naman tayo sa implementing rules, di ba? Hindi pala kailangan nyo, kailangan lang ipatupad. Maraming salamat, Mr. Chairman. Can I transfer to the other
Thank you,
committee room? Maraming salamat, Biayan.
thank you, Senator Francis, who has under his belt 3 PhDs, all in law, in different countries, I think, or in states. So thank you for that advice. I'll go to another question that was raised last time, no, and this is very critical to DOF or BSP. This is in the case of. I remember last time there was one resource person who said that removing tax exemptions from long-term investments, no, will penalize senior citizens. No? And I want to ask BSP and DOF about this. The unintended consequence of harmonization is, of course, increasing the tax rates for long-term maturities, no, or longer maturities in this case. And I remember during the hearing last time, there was information that most long-term maturities are being enjoyed by senior citizens. Do we have any information regarding that? It might be slightly true, but I don't know if you have information or data dividing it by age or by demographics. Can I ask the BSP about that information or the DOF?
Good morning, Mr. Chair. On the part of the BSP, we do not have information specifically on the ages of depositors. What we would have is sort of the percentages of long-term deposits as against total deposits in the banking system.
But
Just
based
to-
on your observation, is there any truth to that statement that long-term deposits are being enjoyed by retirees?
Mr. Chair, this is purely a personal,
Or yeah.
just a thought that normally we try to sort of align investment horizons with investment products. And normally, when you look at senior citizens, for instance, who may need funds sooner for whatever reason, then perhaps the investment horizon would not be as long.
Is it possible to get the age? I don't know if that information is present, no? But the age of the depositors, depending on the maturity of their deposits.
This would not be available on our end, Mr.
I don't know if that
Chair.
information is available.
It's not available, at least with the BSP.
Okay. DOF, do you have that information?
Mr. Chair, we don't have data on that. What we have is actually also data coming from BSP. Like for the general savings, for 60 and above, only 37% of them have quote-unquote general savings. But in terms of the maturity, that is aggregation of how many of those are actually long-term, we don't have those data.
Okay. All right. We requested from the resource person some data on that. No.
But for the aggregate, we have disaggregation for like how many is actually from time deposits or long-term deposits. It's around 1%.
How do you? Can you repeat that again? How do you?
We have here a disaggregation of wait. Can you give me a minute, sir, Mr. Chair?
Okay, sige. While you're conferring with your colleagues, we have other resource persons here who are not present in the past two hearings, and we want to hear your comment. First is from SEC. Sir, meron. Andiyan ba sila last time? Were they there? Sorry, is SEC here?
Yes, Mr. Chair.
You were here last time pala, no?
Yes.
Ah, okay,
Mr.
sorry. My notes were ano. So we'll call on the Philippine Aerospace Development Corporation, represented by Ms. Castañeda. Any comments? I think your PADC is part of the repealing clause, no? So any comments on the bill? Go ahead. You can take the seat para we can record your comments. Please identify yourself and then the agency.
Good morning. My name is Feliz Castañeda. I would like to request your indulgence. I was just informed to attend in behalf of our president who was called to the House of Representatives this morning. So I wasn't ready. I'm so sorry to.
Okay, just send us your position paper
Yes, sir. We will do that.
because your agency is one of the agencies that are part of the repealing clause. No?
Yes, sir.
We call on the Department of Agrarian Reform, Attorney Lucido. Any comments?
Good morning. Good morning, sir. Sir, we will be submitting our position paper, especially that this bill, once passed, will be our stakeholders, especially the agrarian reform beneficiaries, will be affected. Right now, sir, we are confirming whether we have demographics as well as to our agrarian reform beneficiaries, as to the users of pickup trucks. So once we acquire that statistics, sir, we will be providing the board.
Attorney, but how will it be affected, your beneficiaries? Can you discuss with us so that it will be put on record?
Yes, sir. Since we are engaged with agrarian reform, and we also have projects, Your Honor, of farm to market road, especially assisting our farmers with their productivity as to the farming wise. Some of our beneficiaries are and also the cooperative stakeholders of our department are keen into the purchase of pickup trucks, and also in our department as well, sir, in transporting our extended services with our agrarian farm beneficiaries. We as well use pickup trucks. So that Your Honor, that our department is affected.
But how about your I think in the repeal, some of your tax privileges will be repealed. Now, how will that affect your beneficiaries and also your mandate insofar as granting land to your beneficiaries?
Yes, our mandate, sir, is to provide that, and that is not directly affected. However, our side projects as to giving assistance to our ARBs, that part is affected. But as to the mandate of providing the land titles is not directly affected.
All right. Thank you for that. We call on PDIC, represented by Attorney Mendoza.
Good morning, Mr. Chair, and good morning to everyone. I'm Attorney Luisito Mendoza from PDIC. I would like to manifest that since the 17th Congress, we filed already our comment or opposition to the proposal to repeal our provisions regarding the tax exemption on the issuance of bonds and other instruments. Notes. And if you may allow, Mr. Chair, to read portion of my comment.
Yes, go ahead,
Okay.
Attorney. Better, so that
Yeah.
we can capture that on the record.
It will not take 5 minutes. The PDIC, as a government instrumentality with corporate powers, was created pursuant to Republic Act number 3591 as amended, primarily to perform the sovereign functions of providing insurance coverage on all insured deposits, help maintain and promote a sound and stable banking system, and safeguard the interest of the depositing publics. In the aftermath of the 2008 global financial crisis, the lawmakers strongly felt the need to put in place measures that, with the imprimatur of the President of the Republic of the Philippines, could be tapped to shore up PDIC's liquidity. As part of the financial strengthening measures of PDIC and to give more confidence to the public, Republic Act number 9576 authorized PDIC, as may be necessary, to issue notes, debentures, bonds, or such obligation for purposes of providing liquidity for settlement of insured deposits in closed banks, as well as for financial assistance to prevent bank failure or closure and or restore the insured bank to viable operations. To make this financial instrument more attractive to the prospective investors, the law provided that it shall be exempt from taxation, both as to principal and interest. This tax exemption, coupled with the guarantee by the national government, was intended to incentivize and encourage investors to invest in the financial instrument. The timely acquisition of much needed funding for financial assistance for troubled banks, most especially during times of financial distress, and the immediate payment of deposit insurance claims are paramount to safeguarding and promoting the interest of the depositing public to help maintain a sound and stable banking system. Said tax exemption will help facilitate the sale of the securities and possibly make it a preferred investment relative to other public and private debt issues. To repeal of the tax-free features of this instrument will lessen their effectiveness as a fundraising measure, as it will dampen the interest of investors. Having enough liquidity from the proceeds of the issued financial instruments will help preserve and maintain the Deposit Insurance Fund, the DIF. A strong and sufficient DIF help to maintain financial stability. The government recognized that it must extend all means and adopt mechanisms necessary for the corporation to effectively fulfill its task of promoting confidence in the banking system. This can partly be attained by maintaining and preserving the tax exemption of the notes, bonds, debentures, and other obligations to be issued by PDIC under Section 24 of the. Thank you, Mr. Chair.
Thank you. Thank you, Attorney Mendoza. The repealing clause will repeal your tax exemptions on interest income and issuance of bonds.
Yes. Mr.
Have you issued bonds in the past?
Not yet. Actually, this is a standby provisions in case PDIC need, in case the need arises.
So ever since PDIC was created, it has never issued bonds?
Never.
Yeah, I have never, don't recall that.
Yes.
And do you have any intention of issuing bonds?
I cannot say that, Your Honor. At the moment, I have no idea, but I think PDIC is very healthy.
Okay. And of course, national government always makes sure that PDIC will have adequate capital to respond to any dire situation.
Yes.
Mr.
Mr. Chair.
What will be hypothetical if we repeal this clause? What will be the impact to your mandate and to your clients?
I think Mr. Chair, since our notes and other obligation will not be exempt from the income tax, we will have difficulty offering the notes in case we issue the same, because we have a lot of competitors.
You, Attorney Mendoza. We'll call on PRA, Philippine Retirement Authority, Mr. Rojas.
Hello, good morning, everyone. Good morning, Chair. I'm Mr. Mark Genesis A. Rojas from the Philippine Retirement Authority. On our behalf, we will submit our position paper, sir, regarding the effect on the proposed amendment regarding the passive income on the deposits required from the foreign retirees who are applying for special resident visa, which we are offered to them, Your Honor.
Okay, and your tax exemption naman here is on interest income, capital gains, and doc stamps and issuance of bonds as well. No?
Yes, Your Honor.
Will this have any effect on your current operation?
Not really,
And
Your
if you have
Honor.
excess money and then you're earning on interest, meron bang ganyan?
Yes, sir. Because PRA, sir, before a foreigner, before a foreigner can be a holder of special resident retire visa, we require them, Your Honor, to have a initial deposit, which in turn it earns passive income, Your Honor.
But that's their income, not not PRA's income.
Yes, Your Honor.
Correct. So what is being envisioned to be repealed is your tax exemption on your interest income.
Yes, sir. Yes, Your Honor.
Correct. So my question is, how will this affect your current operation and your mandate?
Your Honor, we will look into that, Your Honor, and we will provide it in our position paper, Your Honor.
Okay, well, you haven't read the law? I-repeal yung i-repeal yung privileges ninyo.
With regard to that, Your Honor, it has an effect on our operation. So we will submit a counter proposal, sir, on how the amendment will still beneficial to us.
Okay. Well, to those agencies who are here right now, no, I really hope that you have read the law and talked to your management, because this is the whole point of having a hearing, is to hear whether it will affect your operations or not. No? Like for me, I support attracting retirees to come to the Philippines by granting them all of these things. No, but I'm wondering whether the repeal will have an impact to that mandate. That's my question.
With regard to
Because
that,
in my analysis, there's no impact, because that's an exemption on your interest income, not on their interest income.
you are correct, Your Honor. On the target retirees for their application, it has no effect because
But on your on PRA's operation, will it have any effect? I don't know. I don't know if you have billions of money that you put in on time deposit and then you earn interest without any tax-free. So, mayroon bang ganyan?
as far as I know, Your Honor, wala naman po.
Okay.
There is none.
Anyways, just submit to us a position paper.
Thank you, Your Honor.
National Irrigation Administration, represented by Attorney Madrid.
Good morning, sir. Good morning, everyone. On the part of the National Irrigation Administration, we will submit our position paper so that we can make an intelligent comment on the proposal. Proposal to exempt us from interest income, capital gains, and doc stamp, sir.
Yeah, the same question. Will this affect your operation and mandate?
In my opinion, sir, apparently for now there is none, but from the direction that we are going, that we will engage in a lot of PPP projects, there might be some impact, sir. So we will need to study this, sir.
Do you have any PPP projects in the next 1 year, 2 years?
There are a lot in the pipeline, sir. Currently, we are we're having a PPP ad hoc committee
Okay.
meeting, sir.
And how will this repeal of your tax exemption affect that PPP, those PPP projects that you have in mind?
Sir, since PPP might involve some funding and financing, sir, it, in my opinion, sir, there might be some impact, sir. Especially, sir, if there will be some joint venture arrangements between private companies, then they will engage in some refinancing and investment opportunities. So, on the end of NIA, it might have some impact, sir.
Does NIA plan to issue bonds in the next 12 months?
For now, sir, I have no idea, but from the direction that we are going, it might be possible for NIA to issue bonds, sir, just to increase our capitalization, sir.
Okay, thank you. Thank you, Attorney.
Thank you, sir.
We call on the mga private sector. We call on the different private sector stakeholders who were not present last time, but they're now with us to share their thoughts and opinions on the matter. The Emeritus Microinsurance MBA Association of the Philippines, Ms. Jocelyn De Quito. Any comment?
Good morning
Attorney Bandon?
Good morning po.
Hindi, Dr. Alip.
Dr. Alip po.
Yeah.
Maraming salamat po, Senator Gatchalian, for giving us the opportunity to give our opinion. Alam niyo po, yung Microinsurance MBA Association of the Philippines, if I may, is a membership organization of non-stock and non-profit microinsurance mutual benefit association that are owned by the members and also managed by the members. Kami po ay 19 MBA microinsurance membership at ang amin pong total membership ay 8.87 million at dahil po family insurance kasama po dito ang dependents, our total insured individuals in the country is around 29 million lives. Ito po ay 26% of the entire population of the country, and this belong to the poverty sector. Every day po, meron po kaming registered na 261 deaths, claims per day. Kasama po dito yung dependent at yung member namin. At kami po ay nagbabayad ng 7.46 million every day. So kung ito po ay wala ang MBA, ito po ay pupunta sa iba't ibang charity o sa ating local government units. So we have proven that this microinsurance MBA have been very, very effective. At kami po ay nakakapagbayad within 1 day, maximum po at 3 days. Based po doon sa aming legal research, ang MBA po ay talaga pong exempted for paying corporation tax, tax on life insurance premiums, and documentary stamp. Ito po ay nasa saad sa Republic Act number 10607 as amended in the Insurance Code. MBAs are registered and organized as non-stock and non-profit organization under Section 404. Yung pong National Internal Revenue Code ay sinasabi rin po dito as amended, exempted po ang tax corporation, Section 30C, exempted din po sa paying 2% of total premium tax collected, at yung documentary stamp. Ang amin po ang gustong pa-clarify po dito sa batas, lalo na sa PIPITA, ay ang nakalagay po ay Mutual Aid Association. Kung pwede pong maging Microinsurance Mutual Benefit Association na po ang mapalagay. Kasi po, na-devolve po ito sa BIR at dahil po ito'y na-devolve sa region, iba't iba po kung minsan yung interpretation. So meron pong mga MBA na nakakakuha ng tax exemption, meron din pong may mga questions. So kagaya po na napag-usapan kanina, if you really want to simplify para sa BIR yung administration, kung pwede pong mailagay na po doon sa pag-amend, doon sa pipita lalo na, ay mailagay na po yung microinsurance instead of doon po sa microinsurance mutual benefit association. Sa hindi na lang po mutual aid association. Maraming pong salamat. Meron po kaming position paper, Senator, at pwede po namin ibigay ito.
Thank you, Dr. Alip. So, Dr. Alip, how many microinsurance organizations are there in the Philippines?
24 po yung nakasaad, nakalagay po sa na-registered na po. Ang member po ng MIMBA ay nasa 19 po. Kami po yung pinakamalaki dahil nasa 29 million po ang aming na-insured na individuals.
And this microinsurance, these are member-owned
Yes, sir.
organizations.
Member-
Para silang co-op.
Apo, ito po ay member-owned at sila po nagpapatakbo nito.
Okay.
Kaya mababa po yung premium at malaki po yung nabibigay na benefit sa mga members.
Okay. And they extend the life insurance
Apo, kasama po
to
dito.
the members. Can you cite some examples kung ano po itong mga products they offered?
Ito po yung life insurance. Pagka namatay yung member, babayaran ka agad namin. Ranging from 50,000 to 100,000, 120,000. Depende po kung ito ay natural death or ito po ay pwedeng maging accident. At kasama rin po dito yung health insurance. Kasama rin po dito yung retirement fund, yung mga members namin. At yung loan insurance po. Kaya napakalaking bagay po ito para dun sa mga mahihirap dahil lalo na pagka may utang sila sa MFI at may nangyari sa pamilya, ito po yung tinatawag nating safety net. Hindi na po ito, nakapagpipigil na po ito na para bumalik sila sa kahirapan.
And you mentioned earlier that to include the dependents, you have 29 million
Live.
insured,
Apo.
lives insured.
Apo. Ito po ay sa kwenta namin nasa 26% of the entire population of the country. At ito po ay sinusuga ng ating Insurance Commission na napakalaki po ng contribution ng Microinsurance MBA ng Pilipinas.
And ang position ng microinsurance MBA is to status quo, in other words. Because right now you're enjoying exemptions, eh. Diba?
Pero dapat pong i-clarify
Yeah,
na po
only
doon.
to clarify it, no?
Para
Okay,
ho,
clarify.
hindi na ho maging ambiguous yung interpretation ng BIR region. Kasi po ito nakadevolve sa regional BIR. Kaya meron pong minsan ambiguous yung interpretation or misinterpretation. Merong MBA na tinatax, merong mga MBA na hindi tinatax. Kaya
Okay.
mas maganda po na i-clarify na po ito sa batas.
Okay. Okay. Of course, pag inconsistent yung application, that leads to corruption, no? Because inconsistent, eh. So that's one of the aims of this bill is to make it clear, no? So that the application will be equal in all revenue district offices, no? My question is, so but your position is to status quo, to make it clear and status quo lang.
Opo, i-clarify lang po para
Yep.
po maging
But
clarity.
even if we even with the present tax regime for MBA, microinsurance MBA, how come 24 lang po yung organizations? How come it's not increasing? No? Because I can see some advantages, no, with microinsurance MBA because first of all, member-owned siya. Then second, you're teaching people to save, to insure themselves, and to rely less on patronage politics. No, so obviously, the more organizations, MBA, microinsurance MBA organizations, the better. No, but what do you think is the reason why it's not It's not increasing. If you have 81 provinces nationwide, that's not even one per province, di ba?
Actually po, yung pong microinsurance MBA of the Philippines, yung pong MIMAP, talaga pong ang aming intention ay i-increase pa yung membership at tumutulong po kami dun sa mga organizations, especially yung mga MFIs who want to replicate the MBA model. At ito po yung ginagawa ng MIMAP, yung MI Microinsurance Association of the Philippines. Tinutulungan po namin ang microfinance organization, yung pong mga NGOs to come up with this kind of model because this has been acknowledged as very helpful. Ang amin pong objective within the next 5 years, yung pong 29 million ma-increase po namin to 60 million lives. Kaya malaking bagay po itong may tutulong kung magiging very clear na po sa amin at sa batas yung microinsurance MBA ay talagang dapat tax exempted. Para wala na pong ambiguity.
Ako kasi personally, I support microfinance, cooperatives, because I can see that this is a very good vehicle to teach our constituents to save, to empower themselves, and to, again, rely less on patronage politics. If they can have a mechanism at the grassroots level to insure themselves so they don't go to... Iba kasi mga constituents natin, they're hesitant to go to the big offices.
Opo.
They want yung nasa community level lang, no? Because it's personal and people are they know the people who run it.
Yes.
So the more grassroots, the more reachable for our constituents, no?
Opo, Senator. Actually, yun po ang aming move talaga. We have one department in our association na talagang tinutulungan yung ibang mga indigenous group, mga MFIs to come up with their own MBAs. And we are closely in touch and working in coordination with the Insurance Commission. And we have a regular dialogue with them on how really to push this insurance. Ang isa rin pong napakaganda dito sa microinsurance MBA, we're known as the institution of 135. Within 1 day, if there's a claim, we will pay. Kung meron pong questions in 3 days, at with finality in 5 days. At ngayon po, because of digitalization, we're now able to pay 824. Within 8 hours, if there's a claim, we pay. Hanggang 24 hours po yun. Basta ito po ay mako-cover ng ating digitalization, we are able to make that happen. At sa ngayon po, ang aming record ay nasa 90%, more than 90% ang aming nababayaran within these record dates.
Wag lang ho 5-6. Medyo 5-6.
Hindi po.
All right, thank you, Dr. Alip.
Maraming po salamat.
We'll call on Mr. George Mina of the Philippine Life Insurance Association. I think these are the big guys naman, no? Yung kanina are the micro guys, Kayo yung major, no?
Thank you, Mr. Chairman. I am George Mina from the General Manager of the Philippine Life Insurance Association. While we will be submitting a written position paper, Mr. Chairman, I'd like to put on record the primary concern of the industry regarding the PIFITA bill. It boils down to the intent to classify our more popular product, the variable unit-linked insurance, to be a CIS or a collective investment scheme grouped with bank products of UITFs and mutual funds. No? Mr. Chairman, there is another bill, HB 642, which is specifically the CIS law, where this particular subject matter is tackled comprehensively. And for so many years, the industry has always been submitting its opposition for such classification. And for the information of the chairman, the Insurance Commission as well as the DOF, then during the time of Secretary Dominguez, had actually supported the position of the industry that VUL is an insurance product. So dito po sa PIFITA, there are provisions that describe the separate variable fund related to a variable unit link product to be classified as a CIS and thereby be subject to 0.75% DST. So this is something new po. Ano? The VUL, dalawang general classifications po ng life insurance products. Traditional, which is mainly protection, savings, tapos po yung variable unit link. The VUL product contributes close to 70% of the total premiums generated by the whole life insurance industry, no? And meron pong out of the total individual insurance life in force business, 66% po dito is VUL. Talaga pong it has become a very attractive product because combined po ito ng combination po ito ng protection and an investment component, no? So kung tutusin po itong produkto na to, it's hitting two birds in one stone, ano? It contributes both to the financial inclusion objective as well as the development contribution to the capital markets development. Kasi po yung investable funds doon sa VUL na ilalagay po yan sa choice ng insured kung saang funds nila gusto itong mailagay, no? So if an additional DST po of 0.75% on the net asset value, starting net asset value of the VUL products, medyo we have no quantification but we believe it will be sizable and may affect pricing and therefore future attractiveness of this product. And therefore the twin objectives of financial inclusion and contribution to the capital markets development may be affected. So yun po yung isang primary. Now, secondary po, similar to the...
Sir, but before you continue, how will it be affected? Can you cite concrete examples?
Ngayon po kasi wala pong DST cost on the VUL except for the protection portion because it is treated as a life insurance product. Mangyayari po pag naging CIS siya, para po kaming we will be dually this product will be dually regulated. The investment portion is subject to the supervision or regulation of the SEC, while the protection component will be care of the Insurance Commission. So ganun din po sa DST, we pay life insurance DST as indicated in the PIFITA on the protection component. Pero magkakaroon po kami ng bagong 0.75% on the investment component.
Right now, walang isa lang.
Isa lang pong DST. Sa life,
on
sa
the
life
life,
lang po.
on the life
Because
side.
it is classified as a life insurance.
The investment side is it regulated? The insurance side?
Insurance Commission po regulates the whole product.
Pero yung sa investment, because you said there it's a dual, no, it's two products in one, you know, the insurance and then
Combination po.
investment. The investment side, is that regulated?
Wala pong separate regulation on that.
Wala
Ngayon,
pong separate.
So everything we're accountable to the Insurance Commission.
Okay. And then with the proposal, now it will be subject to DST.
Opo,
So
yun.
dalawang side, the investment
Dalawang side.
and the insurance side.
Yeah.
But the investment side will still remain it will remain unregulated.
We are afraid that doon po sa kabilang bill,
Oo nga, yeah.
magiging dual regulation po. SEC will regulate the investment side and IC continues to regulate the protection side. So it's gonna be more complicated for our customers and policyholders. Magkakaroon po ng additional mga governance that will be imposed by the SEC. Agents will have to be licensed by both regulators. Products will have to be approved by both regulators because of ngayon po nagpapabilisan tayo because of digitalization. the onboarding of our customers, no? So this will affect delivery of products to the market dahil dalawang agencies pa po ang pupuntahan.
The bill naman doesn't, well, at least in our committee, we don't aim to tackle with the regulatory
Yes, po.
side. No?
Yeah, I understand.
I understand there's a bill nga about CIS. But for this discussion, we don't plan to tackle the regulatory side. No? Only on the tax component. No?
Yung nga po, Mr. Chairman, gusto ko rin pong kung pwede maklarify, paano po mangyayari kasi the CIS bill as it is not moving. No, it's there, but position papers have been submitted. Some hearings have been done in the past, but ngayon po walang movement yun. Baka with the way the PIFITA bill is going and hearings are actively conducted, baka po mas mauna ma-approve ang PIFITA bill, and there will be that provision there of a definition of a CIS, and our investment component of our product will be classified as such. Baka po maging by default, maging CIS po kami.
Understand where you're coming from. Oo nga, meron kasi we defined the CIS
Yes
in the
po,
bill.
yes po.
Yeah. Sige ho, we'll take note of your concern, and also to look at the entire picture. I know for a fact, no, well, full disclosure, I also have products like that personally, no, and it's really efficient.
Opo.
No, because you have to hit two birds with one stone. You have the insurance side, and then you also have the investment side. No, to be honest, I didn't know it was may ganun na product pala, no, until a friend of mine offered it to me. No,
Ang maganda po kasi doon, while there is a guaranteed death benefit sa product na to, yung performance po ng fund could add up to
correct.
the fund value, could add up to the death benefit.
I feel
In the end.
personally it's a very efficient product. No, I feel it's
Sir, that's good to hear.
Hindi ko na sabihin kung sino
Music
yun,
car
but
ears.
it's a very efficient product, and efficient in a way because nga you earn on your insurance basically, no? You earn on your insurance and you get a certain return, no?
Yeah.
So I feel that that product should be made available to as many individuals as possible, no? By reducing friction costs, and of course kung kaya reduce regulation or eliminate regulation. Regulation is a form of friction, eh.
Opo.
So the more you regulate a product or an industry, the more friction, the more you stifle growth. No? So that's my personal view.
And we believe, Mr. Chair, that under the present regulatory environment of this product with the Insurance Commission, comprehensively covered naman po lahat, pati mechanisms to safeguard consumer protection.
Yeah, it's the investment side that have to study it very carefully, because investment.
Yeah.
No, there are risks also involved in investments. No, so so the risk should also be. That's where regulation come in to manage risk. Eh.
Yes.
No? So
Understand.
that's where we have to study it very carefully. But we'll ask. I think the Insurance Commission is here. Andito ba Insurance Commission? Wala. Okay, I thought they're here, but. Maybe separate briefing or discussion we can have. We can talk to the Insurance Commission. Yeah.
Yes.
So go ahead, sir. You were also mentioning another.
Yes, the second point, Mr. Chairman, is just for purposes of clarity also on the DST on the life side. Malinaw po dito sa PIFITA, no? Yung rates that we use maximum of 200 pesos. Ngayon po kasi lang ang habol namin kasi po there is a group. Our insurance products are also sold via the group distribution channel, ano po? Group insurance, no? We say isang kumpanya po, we insure all the employees and things like that. It is silent in the bill, pero isa pong bone of contention between the industry and the BIR up to now is meron pong minsan na-assess pa kami ng additional DST on the individual certificates that are issued for the group members. So na-tax na po yung DST ng master policy. That's only one policy that is issued to the group policy owner, in my example, that is the company. Tapos po, kung may 100 members of that group, bawat isang proof of cover po na certificate ay masasubject pa sa DST. So we have submitted position papers with the BIR in the past about this, that we believe it already is parang double taxation. Since the master policy had already been taxed, dapat po sana yung individual certificates will no longer be subject to tax. Kung maaari lang pong there be an express statement in the PIFITA bill that that is the case, so that it will not be subject to ambiguity in terms of interpretation. Thank you, Mr. Chairman.
Thank you. We'll include a specific language to that effect in your position paper. So we'll study it accordingly. I have to consult, of course, the BIR on that particular matter.
Thank you, sir.
Thank you. Thank you. We call on Mr. Steven Te of the Trust Officers Association of the Philippines.
Good morning. Good morning, Mr. Chair.
Morning. Any comments? Were you here last time?
Yes, we were sitting at the back.
Yeah. But did you give your comments last time?
No, we were not called, Mr. Chair.
Yeah. So
Okay.
yeah. Any comments on the
Yes, Mr. Chair. First of all, thank you for inviting the Trust Officers Association of the Philippines to participate in this hearing on the House Bill 4339. We submitted our position paper last week, and if I may ask the permission of Mr. Chair, I would like to read some portions of that position paper.
Yes, please. Thank you.
Thank you, Mr. Chair. So first of all, the Trust Officers Association of the Philippines, or TOAP, welcomes the proposal to reform the taxes on passive income and noted the objective of the House Bill number 4339, which is to simplify the taxation and to harmonize the rates on interest, dividends, and other passive income. As a background, TOAP is an organization of all trust entities in the Philippines who have authorized by the Bangko Sentral ng Pilipinas to perform trust, investment management, and fiduciary functions. It was established in 1965 and as of to date is composed of 32 member institutions. Under the BSP's Manual of Regulations for banks, trust entities are authorized to open trust accounts and investment management accounts for their clients. The total volume of funds in trust and investment management accounts amount to 5.185 trillion as of September 2023. This is exclusive of the 815 billion in UITFs, or Unit Investment Trust Funds. Trust accounts are a big part of the capital markets and have substantially contributed to market activities. Trust accounts, therefore, must be provided with an environment where they will continue to grow. TOAP respectfully submits the following comments to the House Bill. First, clarification on the proposed amendments to Section 54 of the Tax Code, which provides in part as follows. Receivers, administrators, trustees in a trust or bankruptcy, or any other person assigned or in charge of operating the property or business of another person or corporation subject to the tax under this code shall be imposed with the obligation to file the returns and pay the taxes for such person or corporation in the same manner required under the code. Mr. Chair, the amendment does not make a distinction between revocable and irrevocable trusts. To remove any doubt, we propose an additional provision that would state that the trustor in a revocable trust, not the trustee, shall be responsible for filing the returns and paying the corresponding taxes under the NIRC. The foregoing is consistent with the current practice and aligned with Section 63 and 64 of the NIRC, which provide that for revocable trusts and for trusts where the income is for the benefit of the grantor, the income of such part of the trust shall be included in computing the taxable income of the grantor. The second one, Mr. Chair, is the removal of the units of participation in UITFs for the documentary stamp tax coverage of original issuance of shares under Section 174 of the Tax Code. This is related to the concern raised by Mr. Mina of the PLIA earlier. The proposed Section 174 of the NIRC provides on every original issue, whether on organization, reorganization, and for any lawful purpose of shares of stock of any association, company, or corporation, including shares of stock or units of participation in a collective investment scheme, there shall be collected a documentary stamp tax of 0.75% of the par value of such shares of stock. UITFs are considered collective investment schemes. Therefore, the proposed DST, the rate of 0.75% on units of participation of a UITF is onerous to the investors. This additional cost or expense will deter the smaller investors from participating in UITFs. A DST will certainly curtail the investors' UITF appetite or activities, which will consequently negatively impact the capital market. Moreover, we wish to point out that most of the underlying securities in the UITFs, such as but not limited to deposits, government securities, equities, and corporate bonds, have already been subjected to DST. As such, it seems unnecessary to impose another set of DST on the trust fund or pool which merely houses these securities. While this may not be exactly be deemed a double taxation per se, this seems to be the impact on the investors as their means of or access to these investment outlets are being taxed again. In conclusion, we fully support the adaptation of the Comprehensive Tax Reform Program that aims to simplify, harmonize, and rationalize the tax system in the country. We understand that the funds raised from the CTRP significantly boosted government revenues and urgently funded flagship infrastructures projects and the Universal Health Program. We also have taken note of these objectives and the significant contribution of the CTRP on improving the government infrastructure and services. Lastly, we have an immense trust that a thorough evaluation of the impact of the proposed tax amendments will be made. Thank you, Mr. Chair.
Thank you. Thank you. Mr. Te, how many UITFs are currently operating in the Philippines?
Industry-wide, Mr. Chair,
Industry-wide.
approximately we have more than 100.
And typically, small investors can participate?
Yes,
Right.
for as low as 5,000 pesos,
Okay.
an investor can participate in a UITF investment.
Okay. And then right now, they don't pay any DST.
That's correct, Mr. Chair.
Okay. All right. And in I heard your statement earlier. With this proposal, DSTs, the DST will be imposed on those small investors.
Yes, Mr. Chair.
But do you think that DST is well? Let me just rephrase. When we impose this DST, how much is it compared to the entire cost from the investor's point of view? Wala na bang ibang cost? Like for example, I wanna invest, no? And you said the minimum amount is 5,000, as small as 5,000 pesos. Are there other costs on the part of the investor?
Mr. Chair, the Unit Investment Trust Fund is a pooled investment. So any expenses related to the handling of the investment will be deducted from the net asset value of the investment. This includes withholding tax, management fees, and the likes.
From the investor, wala siyang cost? Wala siya. For example, if I'm an investor, then I put 5,000 pesos. There are no ancillary costs to me.
More often than not, depending on the trust entity, but mostly there's no entry fee or exit fee.
Yeah, yung gano, entry fee or exit
Yeah.
fee. Walang ganun.
Walang ganun.
Okay. And then, you said there are 100 UITFs. And then this is, again, no, a good vehicle to improve financial inclusion. And ako kasi I really feel that we need to teach people how to save. No,
That's
that,
correct.
it's save and invest. Our savings participation rate is very low in our country. So, kaya sila pumapasok na 5-6. No? Doon sila. So, again, we want to improve that. And you think imposing this DST will discourage small investors? No? Will it, based on your experience, will it discourage small investors from participating in UITFs?
As I mentioned earlier, the net asset value of UITF is based on the income earned by the fund, like the interest, the mark-to-market gains, less expenses. No? So you will arrive at the net asset value, which will translate to the valuation of every unit that the investor has. So imposing a documentary stamp tax will form part of the expenses and will therefore reduce the NAV or net asset value of that investment, which would translate to the investor reducing its ROI if we compute for the return of that investment, Mr. Chair.
All right. Thank you, sir, for that information.
Thank you.
Call on Mr. Adrian Ching of Money Market Association of the Philippines.
Good morning, Mr. Chair. So, our association basically is a group of bank dealers engaging in dealing activity of government securities as well as corporate bonds in the domestic market. We are one with the government in harmonization of the passive income tax. From our perspective, lowering the passive income tax from 20% to 15% would entice more investors in the domestic bond market and would promote capital market development. Not only locally, but also it will make our domestic bond market more attractive to foreign investors.
Do you see any negative impact on the financial industry that you're covering?
Well, right now, Mr. Chair, we don't see any negative impact, but we'll draft as well a position paper as we look closely into more with regards to the details of the bill. Offhand, we just have some concerns with regards to the repealing clause on the long-term investments, as we have some investors who bought debt instruments earlier, believing that they will enjoy the privilege of a tax-exempt status of those securities. So once this bill passes into law, so we just need more clarity on how it will be implemented, especially for long-term securities, Mr. Chair.
Thank you for that. We covered all the different GOCCs and private sector. Any comments from our stakeholders? If you have any follow-up comments, some of you we invited from the last hearing. If you have any more comments to share, yes, go ahead, ma'am. You're with CDA.
Yes, Mr. Chair, I am Attorney Maria Lourdes Pacao from the Cooperative Development Authority. Mr. Chair, we took note of your statement a while ago supporting the important role of cooperatives in developing, especially the countryside. And we're glad that the tax exemption of cooperatives as provided for under Article 60 and 61 of Republic Act 9520 was not in any way diminished or deleted. But we took exemption to letter V under Section 38 of SB number 1347 and SB number 1364, which is one of the repealing clauses. This provision seeks to repeal certain tax exemption of credit surety fund cooperatives granted under Section 9 of Republic Act 10744. So, hindi lang siguro po na napansin, but this also pertains to cooperatives which were created under a very recent law, Republic Act 10744, which took effect only last 2016. So, since this law encourages and promotes in the creation and organization of CSF cooperatives to enhance the creditworthiness of MSMEs, cooperatives, and NGOs, which are experiencing difficulty in obtaining loans from banks due to lack of acceptable collateral capacity and credit history, thereby broadening their access to the credit facilities of banks. So if Section 9 of this law will be repealed, the credit surety fund cooperatives, which are barely starting now, would be adversely disadvantaged. So they are barely starting, and to repeal part of their tax exemptions would also be detrimental to the program. So with this, Mr. Chair, we strongly oppose the inclusion of letter V under Section 38 of SB 1364 and 1347. Yes.
Ma'am Pacau, you mentioned that the entities that will be affected will be the credit surety cooperatives?
Yes, sir.
What are these, the credit surety cooperatives?
The credit surety fund cooperatives are LGU partnered cooperatives. Primarily, they're organized to raise up funds that would be used as collaterals instead or in lieu of hard collaterals to support or to secure loans secured from banks. So, 2016 lang po nag-take effect yung batas. And barely, meron pa lang po kaming na-organize as of date na 39 CSF cooperatives.
Bago lang siya.
Yes.
Relatively new. No?
Relatively new.
This is a new segment of the overall cooperative sector.
Yes, Mr. Chair. Actually, the program was conceptualized by the Bangko Sentral ng Pilipinas. And then, after some time, a law has been passed to institutionalize the creation of the credit surety fund cooperatives.
And these are LGU partners. All of them are LGU partners.
Yes, Mr. Chair.
And these cooperatives provide collateral?
Yes, sir. The fund that is administered by the cooperative is used to secure the loans that are secured by cooperatives, by MSMEs from banks.
And who are the members?
The members of the cooperative are cooperatives.
Cooperatives themselves.
Cooperatives themselves.
Okay.
There are also NGOs who are members of these CSF cooperatives. And the LGUs and the GFIs are also members of the cooperative. So it makes these cooperatives a peculiar or an entirely different type as against the regular cooperatives which are registered under Republic Act 9520.
Medyo, I'm not, this is the first time I actually encountered such, no? And the loans that they will be contracting will be extended to whom?
The cooperatives or their members.
The member cooperatives.
The member cooperatives. And also the members of the member cooperatives.
Okay. And typically, what are the loans? What are the objectives of the loans?
All loans should be income generating, should all be productive.
Okay. And then I would assume the taxes that are required to contract the loans are exempted as well.
Yes, because under Republic Act 10744, they will also enjoy the tax exemption privileges granted to all other cooperatives.
Okay, so same sila.
Same lang po.
Okay. And in PIFITA, that will be removed.
Yes.
Okay. Okay. All right. Dapat yata Valenzuela, meron kaming...
Sana po.
Meron ba kaming ganun? Wala yata.
Nagsimula na po while hindi po. After yun na po pala, dun sa kapatid yun na po. We were trying to organize one in Valenzuela City.
Pero hindi natuloy, no?
Hindi pa po. Hindi pa naman, oo. We're working on it po.
Dapat matuloy na habang tax-free pa.
Sana po wag dalang masama sa
Yeah,
rebuilding.
we'll study that. Yung sa Carlo is here, so we'll take a look. Again, I'm very biased to grassroots entities that create empowerment, financial empowerment. I'm very biased to that, maybe because of my experience with cooperatives,
Yes.
microfinance. People are really adverse to going to the traditional institutions. So that's why you have all of these microfinance cooperatives, so that it becomes more personal, it's become reachable to people, and then the objective is to penetrate the grassroots as fast as possible. No? So I'm very biased to that. So anything that we can help those institutions or those entities, government should do. No? Eventually, these people will, once they graduate from cooperatives, they go to banks, they go to the others na. But this is just the entry point. No, the entry point para masanay lang yung tao. No? Yeah.
Yes. Thank you, Mr.
We'll
Chair.
review your comments. Thank you for bringing
Sir,
that up.
we already submitted our position paper on the matter.
Thank you
Thank you
for
very much, Mr. Chair.
bringing that up, Miss Attorney Pacao. Thank you for that. No, I think PRA also, Philippine PNR has some follow-up comments, and then NHA also. So we call on PNR for further comments.
Thank you, Mr. Chair. It's Mike Macapagal, Chairman of the PNR. Magandang umaga to you and all the other members of your committee. We submitted our position paper about a week ago. And if you would allow, Mr. Chair, for me to read portions of our study that we submitted.
Go ahead. Go ahead.
Thank you, sir. The Philippine National Railways, being a factor for socio-economic development and growth, shall be part of the infrastructure program of the government, and such shall remain in and under government ownership during its corporate existence. It has an anticipated major role in the organization and operation of a centralized and integrated transport system in the country. The PNR must be administered with a view of serving the interests of the public by providing them the maximum of service, and while aiming at its greatest utility by the public, the economy of operation must be ensured so that service can be rendered at the minimum passenger and freight prices possible. As a government instrumentality vested with corporate powers, it mainly owns and operates railways. PNR serves the public with the lowest fare in the entire transport industry and caters to the poorest of the poor. In serving the transportation needs of the general public, the PNR currently operates in Manila metropolitan area and in provinces of Laguna, Quezon, Camarines Sur, and Albay. To further accommodate the growing demands of the transportation industry, railroad projects are being implemented in the north and south. It is imperative that the abandoned line services be restored, existing line services be expanded, and new lines services be created. We respectfully opine that the removal of tax exemption can profoundly impact PNR's ability to provide public transportation at the lowest possible cost to its passengers. To elaborate on this matter, observation must be done on the potential consequences of these amendments, which would trigger a domino effect of events. A, increase in operational cost. B, adjustment in fare structure. C, the deviation from the normal transportation patterns of the public. Primarily, the elimination of PNR's tax exemption would result in additional operating costs, significantly impacting PNR's financial status, taking into account its large-scale projects like the North-South Commuter Railway and the South Long Haul, which is that Bicol stretch. To offset the potential increased tax burden, PNR may be compelled to adjust its fare structure, which may lead to increase in fare price. This potential increase in fare price would definitely be a concern, particularly for low-income passengers who heavily depend on PNR's affordable transportation service. Higher fares might drive some commuters to explore alternative transportation options, such as public utility vehicles or private cars, to mitigate the impact on their budgets. This shift in transportation patterns could present challenges, contributing to increased traffic congestion on highways, potentially counteracting the legal objectives of efficient public transportation systems. The auxiliary powers vested in the PNR enable the implementation of improvements over its properties. Any increase in its value can lead to higher taxes due to the removal of the tax exemption. The PNR has the authority to secure loans, credit, and debt obligations with interest income remaining untaxed. This presents a significant potential income loss. In order to provide a more comprehensive understanding of the profound impact that the removal of tax exemption would have on PNR's operations, an accompanying document is appended herewith, which illustrates a simulation that outlines the repercussions on PNR's potential income. The reduction in potential income necessitates a strategic approach to ensure operational efficiency without compromising service quality. It is essential to maintain cost effectiveness to offer services at competitive passenger and freight prices while maximizing utility for the public. Regarding the other proposed amendments to the tax code, we have no objections and in fact fully support these changes as they are beneficial for the PNR. However, concerning the provisions that may decrease our potential income, such as the proposed increases in final taxes on dividend income and capital gains, we maintain some reservation, Your Honor. Thank you, sir.
Thank you, Mr. Macapagal. I saw in your simulation, well, first, the repealing is on tax exemption on interest income, dividends, and capital gains. And in your simulation, there's a simulation that you sent us. No? And correct me if I'm wrong. This is in regards to capital gains. No?
Yes, sir.
So, can you elaborate on how the removal of the capital gains or the exemption on capital gains will affect the riding public? Because at the end of the day, what we're trying to protect or what we are after is no adverse effect to the riding public. No? So how is this going to? Can you elaborate to us how is this going to affect the riding public?
Thank you very much, Your Honor, for that question. There's two ways, sir. One of them is, of course, the sale of properties by PNR. And second, the sale of old rolling stocks that PNR owns. As you very well are aware, we're currently building the North-South Commuter Railway as it passes in your province of Bulacan, Mr. Senator. So when this tax exemption is taken out of the PNR, when we sell our old rolling stocks, it will present a tax problems for the PNR in terms of selling our old, yung mga luma naming pagod, our old rolling stocks.
I think the old rolling stocks will not have capital gains, no, because it's fully depreciated na.
Sir, with all due respect, they do have them when we do sell them. Pag binenta ko namin na
How will it have capital gains if it's depreciated?
We have our, controller.
Yeah,
with
the
us.
land, inland, sigurado meron
Yung
yan.
land, yes sir, the land.
Sure.
Yung
But assets normally depreciated, lalo na old, no?
Sir,
So how will you have capital gains?
sir, on the book value that's being charged.
Ah, okay.
So of course they're old equipment, so the book value that's being charged at fair value.
Okay.
Uh,
But
so
you can always add depreciation.
kasama yun sir, pero deducted na po yun eh.
Tapos may gain pa rin?
Yes sir.
Ang klaseng asset yan, ha? Ano, ang klase, after depreciation, dapat wala nang gain, lalo na capital equipment, no? Because these are old equipment. Let's take land for example. Do you have plans to sell land in the next 12 months? What is the plans of PNR? No, I do admit that when you sell land, you have capital gains. No? Malaki yan, actually. Even the taxes are also big. But this really depends on what are the plans of PNR. For example, do you have any plans to sell land in the next 12 months or 24 months?
Kasi sir, we're building the North-South Commuter Railway. So this is from Clark, and it goes to Pampanga, Bulacan, Manila, all the way to the south, Alabang to Calamba, Laguna. So yung old lines namin, no, para kuha kami ng additional revenue for the agency because we're running in the red, no, for the past few years. We plan to see what we can. No? Either we're going to rent them out or sell them. Also, meron kaming proposals for the South Long Haul, the entire Bicol stretch. And we have to figure out what we can do to use yung mga old lines namin dyan if we're not going to use them for the South Long Haul. And of course, there's that Mindanao line also that's being proposed recently. So we're hoping that the PNR will be able to keep its tax exemption so that when we do plan to sell these lands and yung mga luma naming trades, then we'll have more options. And also that we could sustain our operation and not, have the options to yung losses or potential losses that will be incurred doon sa riding public kasi potentially it may affect yung operational cost namin, sir.
In your planning, do you have any plans to sell land?
Meron sir we may go to that route but we are currently renting most of this pero yung selling them we may go to that route and it's one option that we would like to keep and utilize when needed.
Okay. Well, thank you for your position paper. It's quite comprehensive. To appreciate fully, just submit to the committee your plans and programs, no? Especially on the item of selling of land or divesting properties. Because
Yes,
that
sir.
will help us justify whether the repeal is needed or not. No? But if, for example, the selling of land will form part of your equity, your capitalization, then we can look at that angle. No? Because if you are strengthening your capital base by selling your assets, no? Then there's a justification that can be made. No? But it really depends on your plans. We have to look at that. No?
Okay, sir. We'll talk to our planning group, and we'll also talk to our, other members of the board, and then we'll provide you and submit to you the report as you instructed.
Thank you. And also NHA. I think NHA has a follow-up presentation. No? I think you have a valid concern that we need to hear out, especially your clients are the homeless or people who are trying to find permanent homes for themselves. No? So yes, go ahead, sir.
Thank you, Mr. Chair, and good morning to everyone. In response to the committee's instruction in the previous meeting, we have provided data on the impact of DST no, sa projects of the NHA whose beneficiaries are mainly the informal sector families of the community as mentioned by Mr. Chair. Based on our production target for the current year 2024, with approximately 30,400 units, with equivalent value of more than 12.6 billion pesos, requiring NHA to pay DST would entail an additional cost of approximately 95 million pesos, Mr. Chair. That's for the current year alone. And if we are to implement the same on an annual basis with an average target of 30,000 or more, then we have to pay 95,000 pesos annually or more than that. Moreover, NHA shouldering the DST or sourcing it from the GAA allocation necessitates diverting funds from our housing construction, leading to a significant reduction in housing units built annually. For our current target, it would entail a reduction of more than 200 units under our different housing programs. In addition, if we are to recover the DST cost to our informal settler families, it would entail 30 years in order for NHA to recover these costs because, as we all know, our loan term for our informal sector would reach a maximum of 30 years. So, again, Mr. Chair, we are respectfully requesting to maintain NHA's exemption from DST under the Republic Act 7279. Thank you, Mr. Chair.
Tama ba yan? Here in your position paper, it will take 30 years to recover the DST?
If we are to include them in the loan po ng mga borrowers natin.
Yeah, but DST is only one time.
Yeah, NHA will pay the DST one time but we have to tuck in the cost of that DST sa loan po ng ating mga program beneficiaries.
Okay. But the loan, the DST, I have this, you sent us your position paper. Do you want to elaborate this so that we can include this into the records?
Yes,
This is
po.
a good computation.
Yes.
Sige, go ahead. This is very good that you put this. No?
On table 1, we have submitted 2 tables, Mr. Chair. On table 1, we have provided the cost of a housing unit per typology ranging from 716,000 pesos to a maximum of 1.3 million for our low-rise 5-story buildings. The DST, which is equivalent to 1 peso 50 cents per 200 peso value of the contract, the amount to be shouldered by the beneficiary would range from 5,300 to 10,000 pesos per beneficiary.
Comsec, can we flag this? No? Itong table 1, this is important. Again, I'm always biased to the grassroots, and we need to extend as much help and lessen friction cost to our grassroots constituents, no? And shelter is one of them, no? So this is a good presentation. Go ahead, and so that we can include your estimates and your comments into the records. No?
Yes. So that's the table 1, Mr. Chair. No, as mentioned earlier, we have different type of housing typologies. No, the row houses on the above rows entails the city resettlement of NHA, ranging from 716 to 838,000 pesos per unit. The cost per beneficiary, if we are to impose DST, ranges from 5,370 up to 6,285. Now, for our in-city resettlement, which is the 5-story low-rise building with a unit cost of more than 1 million, the DST would now cost approximately 10,000 pesos. Now, if we look into the entire project of the NHA as stipulated in Table 2, which is on the next page. Okay. So this table indicates our target for 2024. So we have a target of 30,398,000 housing units with the following details no, under resettlement and under our calamity housing program. The funding requirement to build those houses is equivalent to 12.6 billion pesos. Now, if we follow the formula of 150 per 200 peso value of a contract, the DST to be charged against our funds would be equivalent to almost 100 million or 95 million pesos for year 2024 only. Now, if we are to take that 94 million pesos from our current GAA, then it would entail a reduction of approximately 228 housing units.
This, we'll go back one by one. I think the table one's more important. What we're saying here is for a family who would buy 26 square meters, the cost now is 716,000 pesos. And an additional imposition of DST, that family will have to pay 5,370 pesos in addition.
In addition.
Kaya
for sure.
mag-shoulder niyan.
Yes po.
Okay. And of course, it goes on for 28,000 for 28 square meters. The cost of the house is about 816, and the additional cost is about additional DST is about 6,120. So in other words, pass on to.
Pass on po siya, pero since naka-loan po siya sa amin, kami pa rin po yung magbabayad noon.
Mag-advance.
Mag-advance, Mr. Chair. That's why yung second slide or second table, 95 million po ang babayaran namin sa aming 2024 target.
Because this will be, itong 716 is paid within 30-year period.
30 years po, Mr. Chair.
Yeah, 30-year period. So the 5,000 will be amortized for 30 years.
For 30 years
Okay.
again.
All right. But in the meantime, because it's a single transaction upfront, NHA will have to pay in advance, no?
In advance, or we have to deduct it from our GAA.
Okay. And then in table 2, the NHA will have to pay 94 million for DST.
That is
But
correct.
that will be amortized again for the next 30 years. Correct? Itong 94?
That is correct, Mr. Chair. That's for the year, for the 2024.
But it will be passed on to our consumers for the next 30 years.
In a spread of 30 years. But the succeeding year, Mr. Chair, is another 95 million and again spread in 30 years. So it would become an annual obligation of NHA.
Okay. And then in your bottom portion, housing program for calamity victims. So even though those who were affected by calamities will be imposed DSTs.
That is correct, Mr.
Right
Chair.
now, it's not, no?
None of our housing projects are being imposed.
Okay. None of the housing projects. But I think the more critical here are the ones affected by calamities. No? More or less, they're displaced. They don't have employment because they're calamity victims. So we have to extend as much reprieve, as much help as possible, no? Including exemption from taxation.
That is correct, Mr. Chair. But even in our resettlement programs, Mr. Chair, these are also informal settler families living in danger areas that we have to relocate. So,
all right. Itong 12 billion funding requirement, has this been allocated this year?
That is our allocation this
okay.
year.
All right. So in other words, government is really going to build 30,000 units.
That is our target, Mr.
Okay.
Chair.
All right. Good. All right. Thank you. Thank you for your very helpful and insightful presentation. Again, I am very biased to extending help to our grassroots constituents, especially those who are in need. For example, the calamity victims. And out of principle lang, no? If you calamity victims ka na, then kukuhaan ka pa ng buwis. Diba? I mean, even though it's a small portion, but out of principle, it might not send the wrong signal. It might send the wrong signal, no, to our constituents. So, we'll study this very carefully.
Thank you, Mr. Chair.
Thank you. Any more from our stakeholders who wants to? Okay, we'll start off with PCSO and then Pira after. All right.
Yes, po. Thank you, Mr. Chairman. From the previous Senate hearing, we were requested to present a simulation on the effect of passing on to bettors of the DST. Slide number 6, please. Next slide there. As can be seen po from this line graph, we can see that the moment that the DST was imposed in 2018, there was a slow decline in the charity fund of the agency. So in 2017, the agency earned 53 billion. And then in 2018, our ticket sales soared to 1.18 billion. But this was attributed to the fact that the jackpot price of the PCSO reached 1.18 billion for its Ultra Lotto 658. Note should be taken that in 2018, the passing on of the DST was done sometime in July of 2018. But the effect of the DST on the sales can be felt in 2019. So as you can see there po, the sales of the PCSO plummeted by 35.94% to 42.08 billion. So one of the causes po, so this decline po can be attributed to two factors. Number one is the price elasticity of demand, which resulted from the passing on of the 20% DST to bettors, which commenced in July 2018 and continued through 2019. Given that the PCSO ticket sales are primarily driven by jackpot prices and most of its bettors are from the Class CDE economic brackets, some of them are very sensitive to increase in ticket prices, and the higher cost of tickets led to hesitations among potential buyers. Can we please turn to slide number 7? So this slide shows how the DST affects the charity funds and how it affects the charity funds of the PCSO. So in 2018, when we implemented the passing on to the bettors of the DST, the funds for the medical access programs comprised only 42.68%. versus the 51.66% that it used to have in 2017. Whereas the documentary stamp tax increased from 27.58% of 2017 to 39.40 in 2018. So as can be seen from the above graphs, as the agency was absorbing the documentary stamp tax, the funds that were available for the medical access program and the other charity programs increased. However, if you will relate it to the line graph, the sales were decreasing. So in 2021, when the PCSO was starting to regain its sales, it can be seen here that the documentary stamp tax comprised 57.10% of the charity fund expenses of the PCSO, leaving 21.09 or 2.8 billion for the medical access program. 2022, the PCSO experienced higher revenue. However, the documentary stamp tax was increased from 62.41 and the medical access program decreased to 2.3 billion. So one thing that should be noted is that commencing 2020, the PCSO decided to slowly absorb the cost of the documentary stamp tax and remove it from the bettors as an offshoot of the decline in sales. Next slide, please. So for 2023, you can see here that the documentary stamp tax comprises 67.93% of the current charity fund, and the medical access program only has 2.11 billion or 11.67% of the charity fund. For our forecast for 2024, the management will be implementing a sharing of the absorption of the DST. So 80% of the 20% DST will be shouldered by the charity fund, 10% from the prize fund, 10% from the operating fund. However, as the pie chart shows, it's still not substantial. It still won't make a substantial increase for the medical access program and the special loss if the DST will remain at 20%. Turning to figure 7, to the next slide, please. However, if the DST will be reduced to 10%, the figures here will show that there will be a substantial increase in the free portion that can be used for special laws, our executive orders, and the medical access program of the agency. Quite notably, there will be an increase of 4.98 billion that can be accessed for the medical access program, and also for the UHC, there is a projected, magkano? Let me pull it up, sir, for the UHC. And then for the UHC, we anticipate a 5 billion contribution, assuming that our DST po will be reduced to 10%.
Are you done?
Yes po, thank you.
Parang ano nito eh. Mag-rebrand na kayo, Philippine Charity to Government. Sweepstakes. Kasi in charity nyo is not to our constituents, to our government eh. Your medical access your payment to doc stamps is bigger than your medical access.
Yes, sir. It is quite huge.
So in other words, every money that the proceeds from your sale of tickets do not go in the form of medical program but to doc stamps.
It's what appears in our figures, sir, since we started an increase in the 20% DST.
But in my understanding, I'll pull out the data lang. Games of chance is normally inelastic yan eh. Meaning an increase in cost of ticket sales or cost of tickets will not deter people who will buy tickets, no? Because they're looking at the prices. Eh. So at 20%, dati kasi 10% na yan, di ba? So we just increased it to 20%. And typically, an increase of just 10% from the old rate will not deter people from buying tickets. Instead, they're looking at the price. No? That's what is driving people to buy tickets. So, I don't know the discussion in your board on why government needs to absorb the DST and why not pass it on to our to the consumers. Of course, the rationale to that is because ticket sales might go down, no? But did you study that carefully? Because in all the literature that I've seen for games of chance, whether it's casino, PCS, charity sweepstakes, other forms, it's very inelastic. Eh? Yes. They're looking at the price. Eh? The price is always the motivation.
Yes po. From what I understand po, the passing on to the bettors was removed in 2020 for the lotto games, which is the 642, 645, in an attempt of management to increase the ticket prices. And then effective July 1, 2021, there was also a decision by the management to reduce the ticket prices of the digit games. So the 2D, 3D, 4D, and 6D games to 10 pesos. So the move was to revitalize consumer interest in the games. In 2022, a study po was conducted by the Product Standard and Development Department, which shows that in the period, they compared the periods po from when the ticket cost was at 12 pesos versus at 10. So for example po, for the 2D games, the income that was generated when the ticket cost was at 12 pesos was 1.62 billion, whereas when the ticket cost was reverted to 10 pesos, the sales grew to 2.27 billion. So that was a 40% change or increase. So one way of looking at it po kasi is that for most of the bettors po who play our games, they bet the last 20 pesos or the last 50 pesos or the last 100 that they have in their wallet. So at 20 pesos, you get to buy 2 tickets. At 20 pesos, but the price is at 12 pesos, you only buy 1 ticket. Now, not everyone is willing to shell out an additional 4 pesos to play for a 2D, 3D, 4D, and 6D game. So similar also with the lottery. When I play, I bet the last 100 pesos that I have in my wallet and then play 5 numbers at a 20 peso ticket cost. But if the ticket cost is at 24, that only allows me to buy 4 tickets. So not all lottery players look at betting in a lottery in the sense of an investment, but merely to try their luck in winning the jackpot prize. So that was one of the considerations why the ticket prices had to be shouldered by the agency and removed po from the bettors.
That's precisely what I meant. No? Trying your luck is a function of the price. It's a function of the price. So meaning you're looking at how much you can earn from that small amount that you cough up. No? And even in your slide, let me just put it up in graph kanina. When looking at this graph, yes, there was a dip in 2018, but it recovered in 2021. Can you flash that slide, Comsec? There. 43 million, 57 million in terms of retail receipts or ticket sales. No? So, so in other words, from 2018 onwards, it's still 20% DST.
Yes po, but I would like to clarify po, Mr. Senator, in 2021, we fully absorbed na po the DST. So it was already the agency shouldering it. So if you will relate it po doon sa next na graph, kaya po lumiliit yung available po namin na free portion for the medical access program.
So 2020, 2019, 2020, PCSO was still absorbing
the bettors po from 2018, July 2018 po until 2019. In March of 2020, ang una po na tinanggal yung pagpapass on to bettors are the lottery games. So yung 642, 645, 655. And then eventually po in 2021, sinunod na rin po yung sa digit games namin, which are the 2D, 3D, 4D, and 6D. So parang paunti-unti po namin tinanggal po sa bettors, kaya slowly rin po nag-increase yung income po ng agency.
I get it. So starting 2020, PCSO slowly absorbed
yes po.
The DST. But from 2018 to 2020, it was being passed on.
Yes po.
Okay. Baka dapat lakihan pa yung premyo. Baka doblehin nyo kaya yung premyo. Magkano na ba ang premyo ngayon? Magkano ba ang premyo ngayon?
Sa tagatingnan ko po dito
Yeah,
sa
600 million? 700
I know po, sir. For the Ultra Lotto 658, it's 122 million.
Baka dapat doblehin para... No, but I get your point here, no? Well, because literature will dictate that games of chance generally is inelastic. No? That's accepted by many economists and also in this industry. So just give us, this is a good presentation, but also study it carefully on if you pass it on, no? And run some simulation, how will it affect your ticket sales? No? Because the contention here is DST is being eaten up, or your medical access program is being eaten up by the DST. But that's not the intention. Eh. The intention is to pass it on. No? The intention is to pass it on so that you can do your charity activities completely. So, but then again, I'm quite alarmed. No, let's flash the slide. Yeah, next. That slowly every year, the DST component is eating up your medical access program.
Yes,
In
po.
fact, in 2022, the DST is 11 billion, and your medical access program is 2.3 billion.
Yes, sir.
Only, no? So, but that's not the mandate of
Yes.
PSSO. Your mandate is not to pay DST. Your mandate
Yes,
is
is to do
give
charity.
charity.
And that is the purpose actually po of slide number 9, which would show the substantial increase that we will be able to give to the medical access program if the documentary stamp tax will be reduced to 10%. So currently po, the DST is shared among the 3 funds. Pero implementing that, it's still not sufficient or substantial to increase what we will give for the medical access program. So currently, at 80% of 20% DST, the DST still shoulders 54.26% po of our charity
Yeah.
fund.
But even though we reduce it to 10%, that's not the intention. Eh.
Yes,
The intention
exactly,
is
sir.
for Philippine Charity Sweepstakes to become a charity organization, no? Not to absorb the DST. I don't know if Yusek Dian will agree with me, but that's not really the intention. No? The intention is pass it on because it's inelastic. People will look at the price and they will buy tickets. But in this particular case, it deviated already from your mandate.
Yes po. And we did try po for the DST to be passed on to bettors, and we implemented it po 2018, 2019. However, the line graph would show na talagang after po ma-hit nung jackpot nung October of 2018.
Correct. Yeah. I saw that in the slide. Yusek, you wanna chime in?
Yes, I think this will be a different story if they passed on the DST. The graph will be very different. That's number
it's
one. And then
actually
number two, you mentioned in 2018, in terms of sale, it's the highest. But there is also a correlation to the price, jackpot price. You mentioned in 2018, that was the highest jackpot price of more than 1 billion. And therefore, the high sales, even magkaroon ng DST. Now, the other problem is in 2020 and above, nagkaroon tayo ng COVID. So it's very understandable that the demand also for lottery, particularly if you don't have money na because of COVID and because of the lockdowns, talagang bababa talaga siya. So we have to take a look as well in terms of we have to take into consideration the COVID effect. Number two, we also have to take into consideration yung correlation of the ticket sales to the price. So this is not just a function of the cost. It's also a function of the price.
I agree with you, Sek, because we've been looking at games of chance, and it's really again inelastic. No? That's why diba sa slot machine, if they see 1 million, 2 million, mas marami naglalaro. It don't matter if you don't hit it, no, because that's the nature of the industry. No, so. Again, no, my personal thoughts on this is it should be passed on. No? Government should not, especially PCSO, should not absorb DST because that's not the intention. The legislature didn't increase DST from 10 to 20 for you to absorb. No?
Yes.
We increased it for you to pass it on, and new revenues will come in.
Apo.
Because in this case, it's not new revenues; it's one pocket to the other pocket. Eh.
Apo. Mr. Senator, market po kasi talaga ng lottery games namin are the CDE market. So, it caters to a market that doesn't necessarily have enough extra income to spend for lottery, which is why if you can see po in slide number 6 vis-a-vis slide number 7, so 2019 po will show that in that year when the DST po was fully passed on to the debtors po, the income that we generated was 44 billion. However, during that time po, dyan po makikita na talagang malaki yung naibigay po namin sa medical access program. So, magkakabit po eh. Lumaki nga po yung medical access program, nagkaroon naman po ng decline sa income. So, yun po yung net effect po. And as I've said, usually po what they bet is the last 20, 50, or 100 pesos in their wallet. Kumbaga po, at 20 pesos, nawalan ka ng 8 pesos because they're not willing to add more to buy another ticket, not necessarily. So, sayang po kasi yung 8 na yun eh. Kukunin na lang nila yung sukle versus kung 20 pesos yun, for the 2D or 3D or 4D, sa 20 pesos po, dalawa agad po yung ticket na mabibili nila kasi yun yung buo eh.
Dapat mag-microfinance na lang sila o micro-insurance bago bumili ng ticket. No? Kasi pag bumibili ka ticket in the hope that you have added income, di ba? Eh mag-insurance na lang sila sa micro-insurance. No, but we'll study this. But we need to study this very carefully. Look at all the variables. Tama si Yusek, the winnings, COVID, and all that. We'll look at this from a macro point of view. But thank you for your insights and study, and thank you for getting back to us.
Thank you, sir. We will be submitting our position paper as soon as it's signed.
Yes.
Thank you po.
Yes, of course, my goal is to help PCSO increase its medical access program because that's your primary mandate. That's your sole mandate, actually, not to pay DST. That's not your mandate. So we'll study this very carefully. Thank you.
Thank you po.
Thank you. And to Pira?
Good morning, Mr. Chair. I'm Denden Tesoro. I'm chairperson of Philippine Insurers and Reinsurers Association. Mr. Chair, we've already submitted our position paper on House Bill number 4339, but we would just like to reiterate our support for said bill. In particular, first is that to maintain the VAT that is charged on direct insurance policies. Second is to exempt the reinsurance premiums from the VAT and also from the withholding tax, as the taxes have already been charged on the direct policy. And thirdly is to gradually reduce the doc stamps or DST from currently 12.5% to 7.5% by year 2027. Mr. Chair, we shall also be submitting additional information for your reference and to aid in your deliberations and review of the subject matter. Such additional information, Mr. Chair, will include the breakdown of the premium volume coming from corporate accounts and from individual insureds. We will also put an illustration on the impact of these taxes on both. We shall also be presenting a study on how the rationalized taxes on insurance can help increase the insurance penetration ratio. We will also show a study on why administratively it will be very tedious to submit granular reports as regards reinsurance, because reinsurance companies are also anyway under the supervision of the Insurance Commission. So they also have individual reports, Mr. Chair. So, and we hope for your continued support on our position. Thank you.
Thank you for, yes, indeed, we received your position paper and we had a fruitful discussion last Friday.
Friday, sir.
Yeah, to look at the intricacies of your industry. So we'll continue to engage you.
Yes, sir.
Admittedly, this is a very specialized industry, especially the reinsurance portion. So we'll continue to engage you as we go along the bill.
Thank you. We look forward to the discussion, sir.
Thank you. Any more comments from our stakeholders? If there are any more, yes, go ahead, sir. Why don't you take?
Good morning. I'm from the National Food Authority.
Yes, go ahead, sir.
Yeah, we would like to manifest our intention to submit our position paper regarding our exemption from documentary stamp to support the budget on NFA. Its mandate to provide buffer stocks for calamity victims all over the country. That's the mandate of NFA. So if you will be exempt from documentary stamp on letters of credit, the budget of NFA will be supplemented. We will submit our position paper, Your Honor.
For NFA, I can see from the repealing portion, tax exemption on interest income and documentary.
Documentary
Yeah.
stamp tax.
So what you're advocating is to retain the exemption on documentary stamp.
Documentary stamp,
What
Your Honor.
particular transaction
Uh,
does NFA?
On letters of credits, we contract with Land Bank of the Philippines and Development Bank of the Philippines. We would like to be exempt from doxy stamps.
Do you pay? How much is the projected payment?
I do not have the figure, Your Honor. We will submit our paper.
Okay.
So it runs to millions of pesos. If we will be able to save that doxy stamps, the budget of NFA will be supplemented on buffer stocking.
Thank you.
Thank you, Your Honor.
Thank you. Any more from our stakeholders who wishes to do a follow-up comment or follow-up presentation? If not, I'll go back to DOF. No, and I think we had that issue on long-term investments because the concept is to have a single rate, no, for short-term and long-term, no, at 15%. And the consequence of that, those who are investing long-term will now, the rates will go up, especially the 5 years and above, which are exempted. So we know the value, but do we know who they are, no, who are investing? We know the value, we discussed that last time, but what's important to me is who are the ones investing long-term, especially the 5 years and above. Do we have that information? Because the claim of some of our stakeholders are, these are the retirees, the senior citizens.
Unfortunately, Mr. Chair, we don't have those data. But again, we only have the number of time deposits in terms of yung kanilang percentage share. As you mentioned, time deposit share to total deposits is only less than actually 1% of the total. And then we also have data on the time deposits in terms of amount. Those above 5 years, it comprises about 10% of the total amount. So on average, total time deposits is around 2.6 trillion pesos. And then around 10% of that is around 266 billion, basically.
The best efforts na lang. I know it's I know that BSP and DOF, they don't collect data on a per age level. But best efforts na lang if you can get that information, because that's vital to our decision to harmonize that, no? Especially the exempted ones. Because in the harmonization, of course, easier to compute, reduce the base, the tax base, but the consequence of that, those who are enjoying zero or exempted will now have to pay 15%. No? So, but we want to capture sino sila, no? Who are they? That's what we want to capture.
Yes, Mr. Chair, we'll coordinate with BSP.
Yeah. Another question to the DOF. We ran some simulation, but I don't know if you have your own simulation. But across the different bills, no, the House bill, the Senate bill, we were trying to project what will be the impact to our revenue effort. We all know that there's a PIFITA as a standalone bill, no, will reduce revenues by 80 billion, no, or 83 billion to be exact, no, in the next 5 years as a standalone bill. But if you look at the entire proposal, then we have revenue gain, no. But as a standalone bill, we're looking at a revenue loss of 83 billion. Now, we wanted to know what will be the impact to our revenue effort, to our budget deficit, to our gross financing needs to GDP, and to debt to GDP. Do we have that information right now? Because we want to look at the fiscal impact of this bill as a standalone bill.
Mr. Chair, actually, we prepared the refined package 4 proposal of the Department of Finance.
Oh, okay.
We actually have several changes, but this is not yet all the changes. This will only include changes on the passive income, financial intermediaries, and DSTs.
Okay. Let's well everyone's here, no? All the stakeholders. Let's do the presentation so there'll be
So again, as mentioned by our secretary, the goal is to front load the implementation of the revenue increasing provisions in 2024 and then backloading some of the administration of revenue eroding provisions in 2028 when the country is in a better fiscal position. I think the idea here is that the package 4 was initially proposed before COVID, before the pandemic, wherein our debt to GDP ratio is only around 39%. So basically during that time, the government has some fiscal space to actually accommodate some of the losses. But given that we are already beyond after the COVID, wherein our debt to GDP ratio is still around 60%, we need to be mindful of the impacts of having a revenue eroding measures. So because of this, ito yung proposal, front load the revenue increasing provisions in 2024 and then backload the revenue eroding in 2028. Next slide, please. So I have basically 3 rows here. One is for the House bill. The second one is the old DOF proposal as of October 2023. And then we have now the refined DOF proposal. So for interest income, there is a change. So instead of 15% gradual decrease, the position now of the DOF is 20%, similar to the House bill. And this will generate around 30.8 billion pesos in revenues. So under the interest income, we have saving deposits, time deposits, FCDUs. Next slide. And then deposit substitutes, long-term negotiable, treasury bills and bonds. But you have there the revenue implications, yung naka-red po. And then corporate bonds and commercial bonds. So for now, the DOF is copying the proposal of the House bill for interest income. Next slide. For the royalties, so instead of a gradual decrease of 1% each year, basically what we're doing is the royalties maintain status quo until 2027, and then by 2028, all will be 15%. In terms of revenue loss in 2028, that will now be 2.7 billion pesos. For prizes and other winnings, same as tax code, we're not implementing any changes. Next slide. For PCO winnings also, same as tax code, not implementing any changes. Now for dividend income, this is also changed. Instead of 15%, so what we're proposing is status quo until 2027, and then by 2028, dividend income is at 10%. So this is a decrease before kasi 15%, now it's 10%. The idea here is that dividends are already kind of subject to corporate income tax, and basically 15%, having it at 15% is will make us not competitive actually. Kasi when you compare it to our neighbors, around 10% yung average. So we reduce it to 10%. In terms of revenue implication, that will be negative 6.6 billion by 2028. Next, stock transaction tax. So we have same proposal. So gradual decrease 0.1% every year until 2028 maging 0.1% siya. And the revenue implication of this from 2024 to 2028 is around 29 billion pesos, assuming no changes in behavior. Next slide. Now for the financial intermediaries, everything is the same. So all at 5% pa rin. And it will be implemented in 2024 or when Package 4 is passed into law. For excise tax on pickups, same as before. Now for the documentary stamp taxes, so first one is the original issue of certificate of stocks. Same as before, it's 0.75%. For sales, agreements to sale, memoranda of sales, deliveries, or transfer of shares or certificates of stocks, we want to defer the implementation of or the removal of this DST by 2028, which will generate a revenue loss of around 769 million pesos in 2028. For bonds, certificates of stocks or indebtedness issued in any foreign country, status quo at 0.75%, ginawa lang ad valorem. Next is certificate of profits or interest of property or accumulations. So remove DST in 2024. For bank checks, draft certificates of deposits not bearing interest and other instruments. So this is a change. We will implement yung status quo. So there will still be a DST. Next slide. For debt instruments, so this one at 0.75% pa rin. Ito yung, it's still status quo at 0.75%. Number 7, all bills of exchange or draft. So this will be removed. The DST will remove in 2028. Revenue loss is around 308 million in 2028. Number 8 and 9, upon acceptance of bills and then yung foreign bills of exchange, same pa rin siya. It's just ginawang ad valorem. And then number 10, this one is for the life insurance policies. So we retain the original proposal for this. Next slide. Policies of insurance upon property. So it will still be the same. So gradual decrease of 1% every year until maging 7.5%. Revenue loss of 16.1 billion. Now fidelity, bonds and other insurance policies, same pa rin. There will be a gradual decrease of 1% every year until it becomes 7.5% in 2028. This will result in 1.4 billion in revenue losses from 2024 to 2028. And then policies of annuities and pre-need, we transferred it to life insurance policies. Next slide. Indemnity bonds, still at 7.5%. And then I think this is the big one, yung certificates. We will remove it in 2028. This will be a revenue loss of around 2.3 billion in 2028. The original proposal is to remove it by 2024. Number 16, the horse racing tickets, lotto, etc., same as tax code. PCO lotto tickets, number 17, same as tax code. 18, proxies for voting in any election. This will be removed in 2024. Ang revenue loss niya lang naman po is 1.4 million pesos, very little. Powers of attorney, remove in 2024. And then next slide. For mortgages, pledges, and deed of trust, same as tax code, but this will 0.3% in 2028. So same as tax code, same siya, status quo from until 2027, and then it will be lowered to 0.3% in 2028. And then lastly, assignments and renewal of certain instruments, same rate as imposed on the original document for renewal instruments, and remove the ST assignment on certain instruments. So same as original proposal. What we don't have now are the exemptions, repeal list, basically the repeal list and the tax admin. So we're still discussing and finalizing it with the secretary. Next slide is the revenue implications. As you can see, it's very different. As mentioned by the chairman, the original DOF proposal is around 83 billion negative total from 2024 to 2028, but with the refined DOF proposal, it's now at 12.2 billion pesos positive. And as you can see, all the negatives mostly are in 2028. And we will still apply yung prospectivity proposal, Mr. Chair. Now, Mr. Chair, for the behavioral changes, we only found two in the literature. One is on interest income. They found interest income relatively inelastic. So the highest elasticity estimate by one study was only at 0.4% for interest income. Now, for stock transaction tax, this one is very elastic. They found it at around 1.5%. So meaning that every 1% decrease in the stock transaction tax, the number of trade will increase by 1.5%. So given that we will decrease it from 0.6 to 0.1%, basically around 83% decrease in price in stock transaction tax, using a 1.5% elasticity, that will increase volume of trade by around 125%. And then for the economic impact, we are coordinating already with NEDA. We've submitted the initial list of the refined DOF proposal to them so that they can incorporate in the analysis the economic impact of Package 4.
Thank you for that. Talagang dito natin makikita yung galing ni Secretary Ralph Recto on managing our fiscal outputs or fiscal performance. To be honest, I've seen that in action here in the Senate on how he manages. At the end of the day, we have to manage the output. No? In this case, the fiscal output. So just by shifting the implementation backward or forward, you can actually achieve a revenue gain. No? Minimal, but at least it's not going to be detrimental to our fiscal health. So I can see that this is where his experience and knowledge in managing our fiscal situation will come in. No? Just off top lang, I haven't really studied this. No, this is the first time I've seen it. But in the first slide on passive income, we've standardized it at 20%. No, the Senate proposal is to lower it down to 15%. No, and the reason for that is because of equity issues. No? The short-term investors normally are at the lower end of our income status. The long-term investors typically are at the upper end of our income status. No? So by lowering down to 15, you're actually giving an advantage to the lower income status. No? So that's the first thing that I saw. No? But I haven't really analyzed the other things. So that's a point of contention that we need to. But do you want to address that, Yusek?
No comment for now, Mr. Chair.
So in other words, yung mga short term, the lower income bracket will now be penalized.
But we're willing to work with you, sir.
Okay, yeah, that's the first thing that I saw. But we'll study this, and I want to seek the assistance of our resource persons to comment on this new proposal, and we value your comments and your suggestions. Well, let me just share our own computation, no? Because we ran some simulations on slide 20. Flash that in our presentation. We looked at the two bills, no, House bill and Senate bill. Then we factored in pick up or without pick up, no? And we found out this is our own simulation, and we're open to criticisms and we're open to corrections. But we have our own model. We ran our own modeling. Slide 22. On revenue effort there, no? So when we looked at the House bill, and then we included the House bill plus pickup. Then we looked at the Senate bill, and then we looked at the Senate bill plus pickup, and of course we looked at the baseline by DBCC. Basically, PIFITA on its own will still achieve the same revenue effort of around 15.5% and grow. It will grow over time to 17. No? This is our own simulation, so not far from the baseline. And if you look at also the fiscal deficit to GDP, it's the same also. It's not going to be very far from the baseline. Slide 23. There. And so the baseline is the gray area, no, the gray line. So it's not far from the baseline. And if you simulate it to gross financing needs, because may deficit tayo so we need to finance it. Over time, our gross financing needs will go down to about 5% level. No? That's the next slide, slide 24. And then on slide 25, debt to GDP will also go down over time to 50%. Not to the 30% pre-pandemic level, but at least in line with our medium-term fiscal framework. No? So in other words, PIFITA on its own, because if you look at PIFITA's revenue erosion compared to the whole, it's not as much, no? Because we're collecting close to about 5 trillion, more or less. No? So on its own, it's not that much. Plus, our economy is growing. No? Our economy is growing at around 4 to 5%. So in other words, growth plus the magnitude of PIFITA, it's not gonna impact significantly our fiscal performance or our fiscal health. No? That's based on our own analysis, because we want to make sure that it's not going to create an adverse impact to our fiscal performance. And if you look at the growth in terms of our macroeconomic situation, we looked at also our GDP growth, slide 19. Based on our simulation also, the House version will yield a better GDP growth for our country. And then if you add the pickup, and it goes on to the next growth. No? So in other words, if choosing between the two bills, the House bill as presented will yield to a better growth compared to the Senate version. But in other words, but both bills will yield to a positive GDP growth. And this is pegging to the baseline by the DBCC. No? So we just compared it to the baseline. No? Of course, this is quite rosy, no, at 7%. But our baseline here is the DBCC baseline, no? Which is actually very rosy by itself. No? So we wanted to capture this because we wanted to know whether PIFITA on its own will yield to a positive economic growth, have adverse impact or positive impact to our fiscal situation. We want to look at all of this before going into the technical working group. So this is our own simulation performed by our in-house team. And again, we're very open to corrections or to criticisms, but we wanted to compute this because we want to move forward already. But we will await for the DOF and the NEDA's official computation, so that we will use that as part of our justification in sponsoring the bill. All right.
Mr. Chair, may I ask, did you assume a increase in revenue effort because of package 4?
No, actually, no, we didn't include that. No. Yeah. But I admit that in looking at all the different packages as a whole, then it will yield to a positive revenue gain. No? But we will now factor in the new proposals by the DOF. But we wanted to look at this because this is also part of our justification that PIFITA will enhance our economic growth. It will not adversely affect our fiscal performance and fiscal health. Therefore, PIFITA on its own will definitely improve revenue administration and also improve some of the will improve the market size of some of its financial sectors, no? The different financial sectors included in PIFITA. No? For example, in the stock transaction trade, no? You said that it's elastic, so meaning by lowering down the tax component, it will improve stock economic activity. No? So we looked at that, but we will wait for the DOF and NEDA's official simulation so that we will use that in our committee report. All right. Okay, so any more last words before we adjourn the hearing from our stakeholders, from our government entities? Hearing none, then feel free to send us your position paper. This is a continuous this is a work in progress to finally come up with the final version. What's that?
Yung data request. Because earlier you said po na mag-request and date on the use of the truck, etc. na isa-submit sa committee.
Okay. Yeah. Sige. We still have some more data requests, but this is ano na ito. As we go along, you can submit to us. To the DOF, figures on the pickup trucks. We discussed that earlier. Data on possible revenue intake due to repealed exemptions. Data on who invests on long-term deposits and investments. To the DTI, obtained from CAMPI and give us an analysis on the use of pickup trucks. To BIR, comprehensive position paper, which will discuss common problems encountered in compliance with various tax rates and how PIFITA will improve this. Breakdown on number of audits and how the proposed bill will reduce this. Bangko Sentral data included in the fiscal inclusion survey, the number of depositors and the value of deposits classified according to term and socioeconomic status. To PNR, plans and programs in selling land. To PCSO, how will removal of exemption affect ticket sales? And also the elasticity to that effect. No? And then, and feel free to submit to us your position paper. We'll have the next session will be a technical working group, and we will already go into the details of the bill. This bill is quite comprehensive and it has numerous pages, so I'm sure that will take a few days to complete. But please join us in the technical working group because that's where the real action will happen. No? Because we will go provision by provision. And we'll announce the date. It's most probably next week, but we'll announce the final date later on. No? So again, thank you very much for your time, your patience, your participation. We really value your openness and, of course, your support to this bill. So thank you very much. This hearing is hereby adjourned. Thank you.